Hello, friends. I hope you people are doing great. So, my name is Professor Shyam Soni, and today we are going to start with a Group 2 subject, that is Paper 8B, Economics in Finance. Now, students, this subject is for 40 marks and it will be along with your FM subject. So, FM will be for 60 marks and this economics will be for 40 marks. Now, before I start, I will just give an idea. There are how many chapters and what are the names of those chapters? Students, I am going to cover all chapters, each and every answer we are going to discuss in detail, which will help you to understand the concept in a better way. Now, students, the first chapter in economics is national income, that is, determination of national income. Second chapter is public finance. The third chapter is money market. And the fourth and very important chapter is international trade. So students, total there are 4 chapters but 14 units. And the weightage for this subject is 40 marks. Very interesting subject, superb subject. So without wasting any time, let's start with our first topic for today. First chapter, that is national income. Now, students, what is this national income is the first question which will come in our mind. Let's understand in detail what is this national income. So, topic is national income. Now, in simple language, students, national income is nothing but income of the nation. The word itself says it is nothing but income of the nation. But the question is, from where our nation is going to earn money? Is my country going to go somewhere and work? Like India went to some other country and started working? No, this will sound weird. This is not possible. तो कंट्री को इनकम कहां से आएगा? So please understand, national income is income of the nation, but my country is not going to go anywhere. I will say my nation is made up of people. My nation is made up of people. So we people will go out, we people will work, we people will earn, and our income will be a part of national income. So please understand, people's income will be included in calculating national income. Let's understand a micro concept first, then we will move towards macro. Students, please remember, in inter-C economics, your all 4 chapters are hardcore macro. Not a single chapter is microeconomics. All 4 are macroeconomics. Now let's take this concept forward. Say example, there is a person, Mr. A, who is working with XYZ company and is earning 50,000 rupees a month as a salary. How much is earning? 50,000. And he is paying tax to the government, that is direct tax. Say example 5,000. So he is left with how much? 45,000. Now students, this 45,000 is called as personal disposable income. That is income left after paying direct tax. What I told? Income left after paying direct tax is which income? Personal disposable income. Now my question to you people is, why Mr. A is getting 45,000 rupees every month? Can I say the simple answer to this question is that Mr. A is working? Very simple. He is working. He may be either producing goods or he may be giving service. वो ऑफिस में जाके काम कर रहा है every day. Every month he is working and then he is earning that salary. कितना मिल रहा है उसको? 45,000. So students, this 45,000 is called as EARNED. Which income? Earned income. So please remember, the first point is all earned income will be a part of national income. अर्नड इनकम वो इनकम होता है जो मेहनत से कमाया है, गुड्स प्रोड्यूस किया है, सर्विस प्रोड्यूस किया है और इनकम आया है. सो वो इनकम को हम लोग क्या कहेंगे? अर्नड इनकम. सो दैट इनकम इज कॉल्ड एज अर्नड इनकम. सो फर्स्ट पॉइंट इज ऑल अर्नड इनकम विल बी अ पार्ट ऑफ नेशनल इनकम. Now, students, the calculation of national income in our country is done by CSO, Central Statistical Organization. So, he is responsible for calculating national income in our country. First point was all earned income will be a part of national income. Now, here, please remember one thing. Earned income is added in national income, that you have understood. But please remember, whatever income we earn, that should be disclosed to the government, that should be disclosed to the CSO. Otherwise, what will happen? Income is generated, income is earned, but government is not aware. So he won't be able to record. Now, say example, if I am taking lectures in this institute, I am going to get salary for this, I am going to get payment for this, and definitely I am going to pay tax. And moment I pay tax, my income gets disclosed to the government, and my this income will get recorded in national income. But say example, just an example, if I take a private tuition of this student, and if I tell him that monthly I am going to charge 10,000 rupees cash as my fees. Now, students, here also service is generated, but can I say income is coming to me in a form of cash? I may not deposit this money in the bank. So this income, this private tuition income will become undisclosed. I may not disclose because government is not aware that I am taking private tuition. But government is only aware that I am taking lectures in an institute. So even that private tuition income should be added because service was produced, service was generated. But since I have taken money in cash, it should come, but it will not come. And my country's national income will be undervalued. So please understand, students, earned income, only earned income is not important. That earned income should be disclosed. Don't hide your true income. Pay tax honestly. No tax evasion should be done, so that government can record the correct income and automatically gets added in national income. Let's move to the next point. Next point says all unearned income like gift, grant, charity, donation, scholarship, pension, all these items are unearned. Neither goods nor services are being produced. So such income should be excluded from national income calculation because they are unearned, and I told you national income is interested in which income? Earned income. So all unearned income should be excluded because unearned income are also called as transfer payments or transfer incomes. Nothing is produced in the economy, please remember. So all earned income will be added and all unearned income will be excluded. Now, next point says, let's understand the meaning, or you can say the definition of national income. Let's understand the meaning and definition of national income. What national income says? National income is a money value of all final goods and services. Important word is, student, important word is final. National income is a money value. So I will write money value. Money value is nothing but price of the product, that is your MRP. So national income is a money value of all final goods and services produced in domestic territory. Domestic territory is nothing but India. So national income is the money value of all final goods and services produced in domestic territory in that particular year. That is, calculation of national income be done from 1st April to 31st March. National income is calculated every year from 1st April to 31st March. So four things. National income is the money value, that is your MRP, of all final goods and services, that is a product should be a final product, produced in domestic territory, that is India, and production should take place in that particular year only, that is from 1st April to 31st March, plus net factor income from abroad. Net factor income from abroad. So say example, what is this net factor income from abroad? Say example, if I go to a foreign country to give a lecture on economics, are they going to pay me? Answer is yes. Am I going to bring money back to India? Answer is yes. So students, that income will be nothing but receipts for the country. Are receipts, because money is coming in our country, because I have given services over there. Now if they come in our country and give a lecture, can I say they are going to take money back to their home country? Then for us it will be what? Payments. So all receipts are added and all payments are deducted, that is R minus P. And students, R minus P is nothing but NFIA, net factor income from abroad. So such transactions are also a part of national income. So total five things. National income is a money value, that is your MRP, of all final goods and services produced in domestic territory in a particular year, plus net factor income coming from abroad. Now students, moment you remove NFIA, you get GDP. You get what? GDP. So national income, GDP, they both are same, but they are not exactly same. Because GDP is a narrow term, national income is a broader term. GDP is calculated on the basis of percentage, national income is calculated on the basis of amount. GDP includes depreciation, national income excludes depreciation. So students, they both are same, but they are not exactly same. Their meaning definition may sound same. So the GDP definition says GDP is a money value of all final goods and services produced in domestic territory in that particular year only. Full stop. Now in this definition, or in this point, if you add NFIA, that is R minus P, you will get national income. Is the meaning very clear? So please remember, product should be a final product. Raw material, intermediate goods, work in progress, semi-finished goods should be excluded. Value of only final product you have to take. Otherwise it will lead to double counting. Example, 2-meter piece of cloth, 500 rupees. What's the value of 2-meter piece of cloth? 500 rupees. And that cloth is converted into a shirt. The value of the shirt is 1000 rupees. So in national income, which value you will add? You will add 1000 rupees. Because from that cloth, we have made that shirt. And that shirt is a final product. But if you add 500 plus 1000, it will lead to double counting. Overvalued, our national income will look. So please remember, please take the final value of the product. A milk converted into cheese, we are supposed to take the value of cheese, because cheese becomes a final product. So final product is that product which cannot be put to further processing, or it is ready for final consumption. So this was your basic understanding or meaning of national income. Now moving towards the next point. There are certain precautions which you need to take care while calculating national income. Certain precautions. Like the point says, any kind of second hand transaction, a old house, a old car, a old motorbike, should not be included in current year national income calculation because that product was produced in the previous year. Now say example, in 2018, a brand new car was purchased for 5 lakh and in 2019 that car was sold for 3 lakh. The depreciation or the deduction is 2 lakh. What amount will come in 2019? Students, nothing will come. Nil. You will exclude. Why? Because the car was produced in which year? 2018. Old car. 5 lakh is already been recorded in 2018. And the same car you are selling today, old product, old transaction. Such transaction should be excluded from national income calculation. But say example, if I hire a person and if I tell him, please help me to sell this car, I will give you commission, I will give you brokerage. Say example 10,000 rupees. Now students, that commission brokerage will come. That will be added in national income. Why? Because that person is giving me service. And what we have understood, anything which is produced in the economy should be added in national income. Can I say वो person मेरा कार सेल करने के लिए मेहनत करेगा एंड वो मेहनत का उसको रिवॉर्ड मिलेगा 10,000? उसका मतलब उसने इकोनॉमी में सर्विस प्रोड्यूस किया. So students, whatever service generated and whatever income that person earns in a form of a commission or a brokerage, please add in national income calculation. But the value of old car, old house, old motorbike will be excluded. Commission, brokerage over it will be added. Next point, anything produced for self-consumption will be added in national income. I again repeat, anything produced for self-consumption will be added in national income. Like say example, farmer is producing 500 kg of rice, 300 sold in the market, 200 consumed. Students, national income में पूरा 500 आएगा because 500 was क्या produced. कितना प्रोड्यूस किया वो इंपॉर्टेंट है. So anything produced for self-consumption is also added. In short, you please remember, anything produced, disclosed to government is added in national income. Production is important. Buying, selling becomes secondary. Next is any kind of investment. Any kind of financial investment where investment is done in FDs, shares, bonds, debentures. Such investment should be excluded from national income calculation because money is just shifting its place. Neither goods nor services have been produced. So please remember, any kind of financial investment will not come in national income. The value of those investments will not come, but income earned over it, like interest, dividend will be added. So interest, dividend earned over it will be added, but the value of that investment, एग्जाम्पल मैंने 50,000 रुपीज का FD स्टार्ट किया, that 50,000 will not come, but whatever interest I will earn, that will be added in national income. Next point says foreign company doing business in India. Foreign company doing business in India. So here, a foreign company setting up a plant in India, producing goods in India, selling goods, earning profits. So please remember, foreign company doing business in India, value of goods produced will be added. मतलब रिबॉक एडिडास ने शूज बनाया, इंडिया में बनाया, प्रोडक्शन इज डन इन डोमेस्टिक टेरिटरी in that particular year, so the value of shoes will be added, but whatever profits they earn should be excluded. Even if they don't take profits to their home country, still it will be excluded. Even if they take profits, still it will be excluded, because profits they are going to register in their home country, because the main company is in some other country. So books of accounts they are maintaining in their country. So please remember, value of goods produced will be added, profits will be excluded. That is nothing but a foreign company doing business in India. Now, next point says, any kind of illegal income, where income is coming from wrong sources. Illegal income, where income is coming from smuggling, black marketing, hoarding, corruption, hawala money, all such transactions will be excluded from national income calculation. Students, even though goods and services are produced, but the source and the way of doing work is not correct, it is against the law. So any illegal transaction should be excluded from national income calculation. Next point they say, any kind of gain or losses excluded from national income. Now, what is this gain or losses? Like, my father had purchased a property 2 years back for 10 lakh rupees. Example. Today that property is sold for 15 lakhs. Can I say 5 lakh is my gain? Now this 5 lakh won't come in national income calculation, because the value of property has appreciated, nothing new has been added in the economy, neither goods nor services has been created in the economy, there is no capital formation, only the old property value has appreciated. For that 5 lakh, me and my father has not done anything. It's because of market performance. Property market was growing, so there was a gain of 5 lakh. Such gains or even losses should be excluded from national income calculation. And also you can say any kind of gifts, trophies, medals, a player or a cricketer winning man of the match, man of the series is a gain, will be excluded from national income. So please remember, any kind of gain or losses not to be included in national income calculation. Next point, they say calculation of inventory. Any stock produced in the current year will be added in national income, like change in business inventory, change in inventory, change in stock, addition to new stock. All such words, all such lines indicates that goods or that stock or that product is produced in the current year. So any inventory, stock, business inventory, business stock, please add in calculating GDP or national income. But one example, please understand. Say example, I am a tire manufacturer. I am a tire manufacturer, and I have produced 100 quantity of tires in 2019. Now there is one company called as Maruti Suzuki. He comes to my company and he takes 50 tires out of this. Out of this 150 tires Maruti Suzuki has purchased, and he has converted those 50 tires in a brand new car. Converted 50 tires in a brand new car. Car is ready. I had produced 100 tires, 50 tires has been installed in a brand new car. What will come in national income calculation? Please remember, students, first of all, value of car will come, because car is a final product. So the brand new car value will be added in national income. And here, students, I am left with 50 tires because remaining 50 were installed in a car. I am left with 50 tires. Even though those tires are not a final product, but since they were produced in the current year, it will be added in national income. So please remember, I had produced 100, 50 went inside the car. That means they were installed in the car. Brand new car is ready. We will add the full value of car. I am left with 50 tires. Even those 50 tires will be added in the economy, because even though they are not final goods, but still they were produced, it should be added. Now students, this point may be going against the meaning or the definition, because definition says only final product. Students, tire is not a final product. Tire is a intermediate product. So please remember, any product produced, converted into final product, take final product value. Any product produced, not converted, but since it was produced, please add. So this was your calculation of inventory. Next point, students, there are 4 factors of production: land, labor, capital, and entrepreneur. But these 4 factors are not going to work for free. We have to give them some rewards. So land will take rent, labor will take wages, capital will take interest, and profit. Entrepreneur will take profit. So please remember, rent plus wages plus interest plus profit. Rewards for all factors of production will be added in calculation of GDP, calculation of national income. Also you will add a dividend plus mixed income. Now students, mixed income is income from many sources, or that income which cannot be distinguished, and that will be called as mixed income. Plus you can say commission and brokerage, that will also be added in national income. So rewards for all factors of production will be included in national income calculation. Very clear? Now please remember, any kind of tax, to be very precise GST, since we are talking about goods and services, and national income basically calculates value of goods and services which has been produced. So for us, what will be applicable? GST. Please remember, indirect taxes should be excluded from national income calculation. You are not supposed to include GST. So if I am telling that you are supposed to take MRP, now say example, price of this pen, say example 100 rupees, just an example. So 100 rupees is an MRP, but can I say MRP includes tax? Because next to MRP it is written inclusive of all taxes. So say example, tax was 10 rupees. So GST was 10 rupees, just an example. So we are left with how much? 90. 90 is your factor cost. So national income should not be calculated as per market price. It should always be calculated as per factor cost. So please remember, in calculation 90 will be taken, not 100. Just for your understanding, I was telling MRP. So it is always MRP minus tax, MRP minus tax, because tax is unearned income. Government is not doing anything for tax. Moment we buy a product, government earns tax. So please remember, tax is which income? Unearned income. And all unearned income are excluded from national income, students. We have already discussed. So indirect tax will not be a part of calculation. And please remember, national income is interested in which calculation? Net calculation. So how you will calculate net? Gross minus depreciation will give you net, which means national income is not interested in depreciation. Please exclude depreciation. So from gross amount, you minus depreciation, whatever is left will be your net figure. Are the precautions very clear, students? Last point to this, please remember, I have already told exports will be added and imports will be deducted. Why? Because exports, goods are going out, but that goods are produced in our domestic territory. Imports, goods are coming from abroad, not produced in our domestic territory, because we are supposed to add only those things which are produced in our country. So all exports will be added and all imports will be deducted, and all receipts will be added and all payments will be deducted. X minus M, R minus P. Students, these were the precautions you have to take care while calculating national income. So I will just read the meaning. What national income says: national income is defined as a net value of all economic goods and services produced within domestic territory of a country in an accounting year, plus the net factor income from abroad. National income is a sum total of factor income generated by normal residents of a country in a form of wages, rent, interest, profit in an accounting year, that is, students, from 1st April to 31st March. Calculation should be done. Quickly we will understand what are the usefulness and significance, that is, importance of calculating national income. First point says evaluate performance of the economy. Now can I say higher national income will tell us whether our economy is growing or not, how my country is performing. Students, our India's national income is $2.6 trillion. India is the 6th largest economy in this world. After India, France comes. See, by calculating national income, we can understand we are placed at which level. What is our rank, global rank? That will help us to evaluate our performance. Are we doing good? Is there need to improve? Second, indicates demand pattern of consumers, which is useful for industries. See, if people are demanding more goods and services, can I say then industries and factories will produce more goods and services? So if people are ready to spend more money, demand will be more, and more demand will lead to more output, more production. More production is nothing but more goods and services will be added. Our national income will look on a higher side. Third, economic welfare depends on the national income. See, students, higher national income indicates there is higher employment in the economy. More employment means more income means more purchasing power, and people will spend more money for their welfare. Also, through national income you can calculate per capita income. Now students, a simple formula for per capita income is nothing but national income upon total population. Roughly I'm telling India's per capita income is around $2,000, 2000. Roughly, average income of an individual. That doesn't mean it is my income or your income. It is just divided, total income divided by population they have done. So you can even calculate per capita income. Next, it helps government to make sector-wise development programs and policies. So government will be in a better position to understand which sector has contributed how much, which sector is adding how much is coming from primary, how much is coming from secondary, how much tertiary sector has contributed. Can I say today tertiary sector is the biggest contributor to our GDP? See, looking at all this, government can frame certain policies. Okay. Next is, it helps government in assessment and selection of economic policies. That is nothing but what should be the ideal budget for the economy. That depends upon which sector is contributing how much. So proper plans, policies could be designed by the government. Then it shows income inequality between different groups. So we can understand the income inequality, that is the gap between rich and poor, or we can understand the gap between two countries' income. It makes possible to calculate important ratios like government expenditure to GDP, like how much expenditure government is doing for the economy, how much is developmental expenditure, how much is non-developmental expenditure, how much money government is spending on subsidies and giving incentives. So everything we will come to know. How much money is allocated for education and healthcare, that is your social infrastructure. So national income is useful in many ways. Next, international comparisons possible. Okay, where we stand when it comes to international competition. As I told you, we are the 6th largest. So international comparison will give us a status. Today, our country is doing, or our country is performing really good. We are the fastest growing economy in this world. Our last quarter GDP, students, last quarter GDP is around 6.6%. The latest data I'm giving you. Still, we are the fastest growing economy in this world. Now, can I say our international reputation will be very high? That will give us a power to dictate terms when it comes to loans. That will understand our loan eligibility. India will have an upper hand in sanctioning or getting loans from other institutions. Provides a guide to make policy for growth and inflation. So whether country should focus on higher growth, whether country should focus on lower inflation, that government can decide. Last, makes projections for future development trend of the economy. So if our economy is doing good today, what we should do to make it best? If our economy is $2.6 trillion today, what we should do to make it $5 trillion? So future forecasting could be done depending upon country's current national income. So students, this was your usefulness and significance of national income. Thank you so much. Okay, now moving to the next question, students. National income usefulness and significance. Now pay attention. Total 10 points we will see. The first point says evaluate performance of an economy. Now what is this? How national income will be useful for us, for the government, for the companies. Now first of all, please understand, currently India's national income is around $2.6 trillion. India is the 6th largest economy in this world. After India, France comes. So looking at national income numbers, we can see how my country is progressing. We can evaluate the performance. Now population wise we are the second largest, but when it comes to national income we are the sixth largest. So there is lot of scope of further improvement, because if you talk about our neighboring country, that is China, China is somewhere around 10 to 12 trillion dollar, doing fantastically good. So there is ample of scope for our country to grow. For that, if goods and services are produced and if transactions are disclosed, then in true sense that amount will get recorded and our national income will look on a higher side. But why our national income is looking on a lower side? The major reason is our country is infested with huge level of informal sector, unorganized sector. So whatever income they are earning, they are getting money in form of cash. So that income is not getting recorded in national income. Now all these things, if it is brought under formal sector, our national income will truly increase and we will be competing with other world countries neck to neck. So national income will help you to evaluate the performance of the economy. Are we growing? At what percentage? Is there a scope of improvement? Yes, no, to what level? Everything national income data will tell us. Second point says indicate the demand pattern of consumers, which is useful for industries. Now see, one thing I have already told you, that production will be added in national income. Now students always ask a question, when factories and industries will produce more? Answer to this is, when people will come, when people will demand, when people will buy. So if people are ready to spend more, producer is going to produce more, and more production will lead to more national income because it will get added in the national income. So higher national income indicates that people of our country are ready to spend. So there is a decent spending taking place. And lower national income indicates that people are saving more, people are not spending. So indicates demand pattern of consumers. It will always tell you, national income data will always tell you the behavior of the consumers. So are they savers, are they spendthrift or what? Third point says economic welfare depends on national income. See students, higher national income will give you higher per capita income. And higher per capita income will give you an average idea that how much person is earning on an average. So whether country is giving welfare to the poor population, whether the benefits are reached to the poor section or not. So economic welfare depends on national income. Higher national income, higher tax to the government. Government will spend more money on people's welfare, upliftment of poor section. Next is, it helps government to make sector-wise development progress and policy. Now, overall three sectors, primary, secondary, tertiary. Now, today, tertiary sector contributes the highest to our GDP, to our national income. Second is your secondary, and the last unfortunately is your primary sector. So which sector is contributing how much? Why primary is contributing less? Why tertiary is contributing more? What government should do to improve the performance of primary sector, farming sector? Because today also major population resides in rural areas. So you cannot ignore primary sector, because you people know what is important. Hardware, software is important or food is important? So first it is always food, then it is other industrial and service products. So please understand, national income data will tell us which sector is contributing how much and what can be done to improve the performance. Next point, fifth point says it helps in development, it helps government in assessment and selection of economic policies. Now national income data, national income numbers will be a feeder for a government to take certain policy decisions. Like at the time of budget, government may plan certain things. Government may try to boost the overall production by giving some benefits to the producers. Like government had started a scheme or a program called as Pradhan Mantri Jan Dhan Yojana. Now this was nothing but to ensure that people do transactions via bank. More than 30 crore accounts were opened in the country, particularly rural areas. So government is ensuring, government is framing such policies that by opening bank accounts for the people, people will do all transactions through the bank, and gradually and slowly they will be a part of the formal economy. Such policies, such actions, such measures will definitely add some points to our GDP. So current national income will tell us and tell our government what steps, what rules, what policies they have to frame. Next is, it shows income inequality between different groups of income earners. Now in our national income, which section has contributed the highest? See, there is a general thing we have come across, everyone will be knowing this, that our country's 80% of income is contributed by the top 20 people. That is, top 20% contributes country's 80% of the income. So today also there is high level of income inequality. Rich keeps on becoming rich, there is a gap between rich and poor. Poor remains poor, the major contributors are rich people, high net worth individuals. There is a person who lives in 4 lakh square feet house, but there are 4 lakh people without house. Now this gap exists in our country and many other countries also. So national income will split up the data, which section has contributed how much. So accordingly, government will try to focus on those areas, those section of the population where their contribution could have been increased. Moving to the next point, it makes possible to calculate important ratios like government expenditure to GDP. Now, government will be in a better position to calculate what is the GDP expenditure ratio, how much money government is spending on education, how much money government is spending on welfare, healthcare facilities, how much money is going in defense, law and order. So there are many areas where calculation can be done that out of the total national income, $2.6 trillion, which section has contributed how much money government has allocated for which section. So healthcare, education, defense, law and order, industries. So you get the various data for it. Next point, international comparisons are possible which assist in determining eligibility for loan or other funds. Now, higher national income always give a very good signal to other world countries and other international institutions like World Bank and IMF. So today, our ranking has improved. If I talk about ease of doing business ranking, so we were 130th. We came down to 100, now we are 77. Secondly, there is a jump in our national income. We were 7th largest, now we are 6th largest. So our performance over last 4-8 years has actually improved because people are actually disclosing the transactions. People are actually entering the formal economy. Certain government measures like demonetization, GST, has added some positive things to the economy. So this creates a very good reputation for India at international level. So in case if we want a loan, short-term loan, long-term loan, IMF will give short-term loan, World Bank will give you long-term loan. So if country needs such loans, so it becomes very easy for us to be eligible for such big loans because our national income has proved that India is an emerging economy, growing economy, performance is increasing. Today our GDP is somewhere around 7.2%, 7.3%. So today we are the fastest growing economy in this world. doing fantastically superb. We have a young population, decent amount of working population. So please understand, international comparisons are possible, which will determine our eligibility to get loans. Next, ninth point says, provide a guide to make policy for growth and inflation. So, two things, government needs to take care that our economy should keep on growing, and secondly, government needs to maintain decent level of inflation. Our last 5-year target for inflation is 2 to 6%. Inflation should not go below 2, not go above 6%. So, on an average, 3.5–4% sounds reasonable. So, government needs to balance both growth, inflation. Now, the rule is, if country keeps on focusing on growth, higher national income, growth, higher national income, growth, higher national income, inflation will also increase. Because this is possible, this activity is possible only when there is a high demand, only when people are ready to spend, only when people have employment. So, if growth increases, your inflation will also increase. But if you try to reduce inflation, you have to sacrifice the growth, because they both have its relation, direct relation. Increase growth, inflation will increase. Reduce inflation, growth will slightly decrease. So, this is government's bit headache. Government needs to take care. Government needs to balance both economic growth as well as inflation. And the last point says, make projections for future development trend of the economy. So, looking at our national income numbers, our country's performance, we can definitely forecast changes which are going to take place in future, and definitely those changes will be for the betterment of the country. So, how to increase our national income, how to maintain inflation level, how to give more level of employment. So, all this forecasting analysis will be done by the authorities, government authorities. So, the last point says, makes projections for future development trend of the economy. So, what was this question? Usefulness and significance of national income. Clear, students? Okay. Now, moving to the next. Okay. Now, let us understand concepts of national income. What are the different concepts we will see? Now, this will be formula based. This will help you during numerical sums. So, pay attention. So, total 4 things. GNP-MP, then you have NDP-MP, and last is NNP-MP. Now, what is this? Let us understand. GDP-MP, gross domestic product. Next one is gross national product. Third is net domestic product, and last is net national product. Now, let us understand what all things will be added, what all things will be deducted from these formulas. Now, these all are the important factors, parameters of national income. Now, 2 things we have to understand here. One is market price and second is factor cost. I guess screen thoda chota hoga. Now, let us understand what all things will be added in GDP. Now, as I told you earlier, GDP, national income, they both are same, but they are not exactly same. Definition looks almost same. So, what is GDP? GDP is a money value. of all final goods and services produced in domestic territory during a financial year. Full stop. Net factor income from abroad will not come. That will come in national income. So, what was the first line in the definition? GDP is a money value of all final goods and services. Now, students, my question is, all final goods and services means which all? Now, can I say in our country there are lakhs and lakhs of goods being produced? We are supposed to include which all goods that we are going to see. So, here we are going to understand 4 sector model: households, business, government and foreign. How many sectors? 4. Households, business, government, foreign. So, first sector is our household sector, who is responsible of consuming certain items like products which we people use on daily basis: clothes, shoes, food, mobile phones, car, bike, handkerchief, specs, watch. List is endless. Stationery products, book, list is endless. So, all these products are produced in our country and all these products are consumed by whom? Household sector. People like you and me are part of household sector. So, goods which are consumed by household sector, they are called as consumption goods. Which goods? Consumption goods. So, GDP includes first item as what? C. C stands for what? Consumption. Second sector in our country is business sector, who is responsible for producing goods and services. But can I say, in order to produce, they will require the help of capital goods. Capital goods like plant and machinery, tools and equipments, road roller, crane, bulldozer, factory building. There are many things. Now, businessman is going to invest money in buying certain goods, such goods. So, money spent or money invested by the businessman, they come under investment goods. So, C plus I. C stands for consumption, C belongs to household, I stands for investment, I belongs to business. Third sector in our country is a government sector, C plus I plus G. Now, C plus I plus G. Now, even government is responsible for producing many things in our country: dams, bridges, airports, highways, metro, monorail, many things. So, even he is also into producing something in our country. So, you can say C plus I plus G, consumption plus investment plus government. Now, moment I stop here, India will be considered as a closed economy. But is India a closed economy? Answer is no. India is an open economy. So, we will add the fourth sector, that is, all exports will be added and all imports will be deducted. So, what is the basic formula? C plus I plus G plus X minus M. 4 sector model. C is consumption, C belongs to household, I is investment, I belongs to business, G stands for government expenditure, and all exports are added and all imports are deducted. Now, but students, here I have written something. What is this? MP. MP stands for market price. What is the meaning of MP? MP stands for market price. Now, please understand, CSO says, or authority says, that national income should not be calculated as per market price. It should always be calculated as per factor cost. Quickly we will understand what is this MP, what is this FC, what is market price, what is factor cost. Now, students, market price is nothing but, in simple language, MRP. MRP of any product, simple. Like, say example, I am a manufacturer of a cell phone, say example, just a light example, and I have produced a product, produced a cell phone for rupees 100. This 100 rupees includes my rent, wages, interest, profit. But the point is, will government allow me to sell this product at rupees 100? So, answer is no, because something is missing. What is missing? Tax. So, what government will tell me? That you pay tax to me. Say example 100 plus 50 will be the tax, say example. So what is the value of the product now? 150. Now 150 is market price, and market price is that price which includes tax, But please understand, we are not supposed to take tax while calculating national income. Reason I will tell you. Because tax is a compulsory payment made by the public to the government without any consideration. Now, moment you pay tax, government earns. So please remember, tax is government's income, not nation's income, because tax is unearned income. Government has not done anything for that tax. Moment you buy a packet of biscuit, a packet of bread, any product, government earns. Later on, government may spend that money for some developmental activity, but that is a later stage. So one thing is very clear, please understand, tax should not be a part of national income. All indirect taxes should be excluded. Is this very clear? So from this 150, if I remove tax, then it will be 100, and 100 is nothing but which cost? Factor cost. So MRP minus tax, whatever is left is factor cost. So one thing is very, very clear, that if you want factor cost, so from MP you will minus IT. What is IT? Indirect tax, GST. Please exclude. Tax is unearned income, excluded from national income. So whatever is left will be your factor cost, and national income is always calculated as per factor cost, not calculated as per market price. Another example, say example, I am a manufacturer of medicine. I have produced medicine for rupees 100. Tax any which ways we are not going to take now, just now we saw. But government is telling me to sell this medicine for rupees 80. Government is like that, people won't be able to afford. So you can't sell at 100, sell at 80. But I was like, if I sell at 80, I will be at loss. Then government is like, don't worry, I will give you subsidies, a help, a grant. So plus 20 will come as a subsidy. Who is going to give? Government is going to give to me. So 80 plus 20, can I say I am back to 100? So that 20 rupees which government is giving to me, that is end of the day my hard earned money coming back to me. So all earned income. So please understand, all earned income will be added in national income. So you will minus indirect tax and you will add subsidies, and you will get which cost? Factor cost. You will get which cost? Factor cost. So very simple formula. If you want to calculate factor cost, from MP minus IT plus S. Is the calculation very clear? Okay. Okay. Now come to the formulas again. I will just decrease the font size. Go step by step. GDP FC. So this formula was for GDP MP, C plus I plus G plus X minus M. But are we supposed to take MP? Answer is no. We are supposed to take FC, factor cost. So let's understand. Bring this formula down. What will be the formula? C plus I plus G plus X minus M. What we will do? Minus IT plus S. See students, this is your market price. From market price I have removed tax, I have added subsidies, and you will get which cost? Factor cost. Is the first formula very clear? So GDP MP is C plus I plus G plus X minus M. Moment you want FC, from that formula remove IT, add S. That is minus indirect tax plus subsidies will give you factor cost. Okay. Now let's move to the next. GNP MP. Now here the word is gross national product. Again, first MP then FC, MP FC. Okay. Now what is this gross national product? If you observe, G remains G, domestic has become national, and price product remains product. So please remember, whenever the middle alphabet is N, N stands for national. And whenever the middle alphabet becomes N, R minus P will come into the picture. What is R minus P? Receipts minus payment. That UK example, I went to UK, gave surveys, money coming back to India. I hope you remember that example. So all receipts will be added and all payments will be deducted. But R minus P will come only when the middle alphabet is N. Moment the middle alphabet is D, please stop at X minus M. Pay attention. First we will calculate what? MP. What's the formula? Start C plus I plus G plus X minus M plus R minus P. Should I write minus IT plus S? No, because we are calculating market price. When we will do that? Factor cost. So is the formula very clear? Why R minus P was added? Because the middle alphabet was N. National will introduce R minus P. What is another name for R minus P? NFIA, net factor income from abroad. Okay. Now let's convert into factor cost. Everyone will start C plus I plus G plus X minus M plus R minus P minus IT plus S. So from market price, if you remove tax, if you add subsidies, you get factor cost. Okay, moving to the next, that is NDP MP. What is NDP MP? NDP MP is nothing but net domestic product. Now see, gross has become net, national has become domestic. National has become domestic, what will not come? Once again, what will not come? Very good, R minus P will not come. R minus P will not come because I had told R minus P will come only when the middle alphabet is N. But here the middle alphabet is D. D stands for domestic. So net domestic product at MP. Now students, here the first alphabet has changed. Gross has become net. Gross has become net. What will come? Depreciation will come into the picture. So please understand, whenever the first alphabet is N, end of the formula it will be minus D. D stands for depreciation. Because national income is interested in net answer, not interested in gross. So formula will go like this: C plus I plus G plus X minus M minus D. Sir, why you have not written R minus P? Because I told you R minus P will come only when it is national. They have given domestic, middle alphabet, so not possible. But what is this? This is market price. We want factor cost. So what will happen now? Start C plus I plus G plus X minus M minus IT plus S minus D. Is the formula getting clear? Okay. So this was calculation for net domestic product factor cost. Now last, that is NNP, MP. First it is always MP, then FC. Net national product, market price. First alphabet is N, second alphabet is also N. So what will come? R minus P, because the middle alphabet has again become N. First alphabet is N, so end what you will do? Minus depreciation. But what is this? Market price. Let's start C plus I plus G plus X minus M plus R minus P minus D. Any confusion? Any doubt? Okay. Now moving to the last. So what's the last one? Let me put it here. So last is NNPFC. So now you people know everything. Start. What will come? C plus, I plus, G plus, X minus M plus, R minus P minus IT plus S minus T. Is the formulas very clear? Any confusion, students? So these were the basic concepts: GDP, GNP, NDP, NNP. Now these things will help you during numerical sums. Please revise properly. Okay? Pause kariye na. Okay. Now students, I hope you people have understood all the concepts of national income, that is GDP, GNP, NDP, NNP. Very good. Now, if you observe here, if you see, we have completed this 1, 2, 3, 4, 5. Now moving on to this one, per capita personal income and personal disposable income. Now these three things we will discuss. Pay attention. Let's understand what is per capita income. Just remember the formula. PCI is equals to national income upon total population. National income divided by total population comes to per capita income. Just for your knowledge purpose, today India's per capita income is somewhere around $2,000. How much? $2,000 is our India's per capita income. This is nothing but the average income of each and every individual of our country. This could not be our real income, but it is just a average calculation done. So total national income divided by total population will give you per capita income. Simple 2 marks numerical sums they may ask on this formula. So just learn this formula and go. That's it. Now moving to the next, that is personal income. Very important. Pay attention. Now, what is this personal income? Pay attention. My income, my individual income will be called as personal income. So for time being, please keep your national income calculations and mindset aside. Don't bring national income here. Please understand what is personal income. Pay attention. Personal income includes national income, but not full national income. You can't say that national income is nothing but personal income. Wrong. So personal income includes national income, but only these items: rent, wages, interest, profit, dividend, mixed income, NFIA. Only these items which are a part of national income, they are also part of personal income. So I again repeat, here I am calculating personal income, here I am not calculating national income. So please keep national income thoughts aside. So what is the formula? Personal income includes national income, but full national income, no. Only these items: rent, wages, interest, profit, dividend and NFIA. Less. What we are supposed to ignore? What we will ignore? Undistributed corporate profits. First item we have to ignore in personal income is undistributed corporate profits. Now what is this undistributed corporate profits? Company has declared profits but not yet distributed. Like dividend declared, but dividend is yet to be distributed. I haven't received yet. Nothing is in my hand. Amount is not credited in my account. I am yet to receive. I am yet to receive. So when it will come, at that time we will add. But as of now, since it is undistributed, so it should not be a part of personal income, so you will minus. This is very clear. Undistributed means income is declared but not yet distributed. Profit is declared but not yet distributed. Second is corporate tax. Tax, any which ways we are not supposed to get, tax companies pay, so automatically your contribution what you are supposed to get reduces. Third is social security contribution. Now, what is this social security contribution? So, this is a contribution given by employer to its employees. Now, say example, government also gives pension, but pension you are not going to receive today, pension you will receive in future, moment you retire. Company gives medical claim facility, health insurance, life insurance, all these benefits, income in a form of kind. Now, I have not got anything in hand today. I have received medical claim policy, life insurance policy today, it is only on a piece of paper. So, when I am going to enjoy the benefits, I am going to enjoy the benefits in future, not now. I am going to get benefits in future, something is going to come in my hand in future. So, today I will exclude. So, social security contribution may be coming in future, but not today. Whatever you receive today, that will be added, otherwise it will be excluded. So, social security contribution will be excluded, and last says what we have to add, that is transfer payments. Sir, but you only told that transfer payments are excluded. Now you are telling transfer payments are added. Now students, transfer payments are excluded when you calculate national income. Gift, charity, donation, pension, scholarship, all these things will be excluded in national income. But what we are calculating? We are calculating personal income. So in personal income it will be added, because personal income will never discuss what is earned, what is unearned. He is interested in money should come in my hand, money should come in my account, and if it comes, then it is your personal income, it is added in personal income, but definitely excluded from national income. So please remember, transfer payments are added in personal income calculation. Perfect. So the overall formula says personal income includes national income, but is it full national income? No, only few items: rent, wages, interest, profit, less undistributed corporate profits, less corporate tax, less social security contribution. But what you will add? You will add transfer payments. Transfer payments are added in national income. No, transfer payments are added in personal income, but it will be excluded from national income. Perfect. So personal income includes national income plus income received but not earned minus income earned but not received. I again repeat, personal income includes national income plus income received but not earned, that is transfer payments, minus income earned but not received. Is the formula very clear? Okay. Now the last formula says disposable income If you remember, I have started my lecture with this only, 50,000, 5,000 if you remember. So what is personal disposable income? Income left after paying direct tax, that is your personal income tax. So person's income is, say example, 20,000, tax he is paying is 2,000, so he is left with how much? 18,000. 18,000 becomes your PDI, personal disposable income. So please remember, income left after paying direct tax. What I told, income left after paying direct tax is nothing but personal disposable income. But students, moment they will tell you to calculate PDI, please see to it first to calculate personal income. So first you will calculate personal income, and from that amount you will minus personal tax or direct tax, whatever they would have been given, and that remaining answer will be your PDI. Very clear? Okay. So we completed till this formulas. Personal disposable income done. So till now we have completed what is national income, meaning, precautions to be taken while calculating national income, usefulness, significance done, and different formulas we have completed. Okay. Now moving to the next topic. This could be for 2 marks, important. Is now students pay attention. One distinguished they may ask, or maybe a 2 marks concept, what is nominal GDP, what is real GDP, or it could be what is nominal national income, real national income, almost one and the same. Now what is this nominal GDP? When GDP is calculated on the basis of change in price. Now please understand, nominal GDP is always calculated on the basis of current prices. See, prices keeps on changing, prices are never constant, inflation, deflation keeps on taking place in different countries including India. So if price fluctuates and if you calculate national income on the basis of change in price, and whatever national income you get, then it will be called as nominal national income or nominal GDP. So please understand students, because of change in price, country's GDP is changing, then it is nominal GDP, because you are considering the current price. See, price is different today, price will be different after 10 days, price will be again different after 2 months. So if price changes and GDP changes, whatever figure you get, that will be nominal GDP. See, GDP may increase, moment price will increase, GDP will decrease, moment price will decrease. So students, we always say nominal GDP is not going to give you the true picture of the economy, will not tell you the true financial health of the economy, will always give you which growth? False growth. Which growth? False growth. But if we talk about real GDP, so this real GDP is calculated on the basis of output. Quantity is increasing in the economy, more number of goods and services are being produced. So if more goods and services are added in the economy and my GDP is increasing, then it is nothing but real GDP. Because here I am not taking price, I am taking output, quantity. And every country wants that more goods and services should be added in the economy. And after adding goods and services, if country's national income or GDP increases, then that is showing the true growth of the country. Then that is called as real GDP or real national income, because it takes constant prices. They take 2011 and 12 as a base year. So they take base year as 2011 and 12. So nominal GDP is calculated on the basis of current price, real GDP is calculated on the basis of constant price. Nominal takes care of change in price, real will take care of change in output. So please understand, nominal is not going to give you true information, real GDP is going to give you true information. Is this very clear? Okay. I will give you one example. It will help you to understand in a better way. Say example, pen. Pen is produced in our country. So output produced was 1 lakh. Price per pen was 2 rupees. What's the value? 2 lakh. Okay. Now this is a situation. Case 1, case 2. Case 1, case 2. Let's understand. Output is 1 lakh. Price is 4 rupees. What's the value? 4 lakh. Price is 4 rupees, value 4 lakh. Now this output is 2 lakh. Price remains 2 rupees. What's the value? Value is 4 lakh. Now you will tell me which case is nominal, which case is real. Now students, please understand. Please understand. Here what is happening? Output is 1 lakh. Here output is 1 lakh. Price is 2 rupees, but here price is 4 rupees. What is changing? Price is changing. And value becomes 4 lakh. So this is going to give you false growth. Which GDP? Nominal. See here what is happening? Output is 1 lakh, but here output is 2 lakh. Output has increased. Price remains as it is. Value is 4 lakh. So here because of change in output, national income increases, GDP increases. Here because of change in price, GDP increases or national income increases. Then we will say it is which GDP? Real GDP. False growth, true growth of the economy. Is the full concept very clear? So distinguish between nominal GDP, real GDP, or nominal national income, real national income, anything they can ask. So please remember, within a minute we will revise. Nominal GDP takes price into consideration. Because of change in price, GDP changes, nominal. Real GDP takes output into consideration. Because of change in output, GDP increases or changes. It is real GDP. Nominal is current price, real GDP is constant price. Nominal GDP will give you false growth, real GDP will give you true growth of the economy. Perfect? Okay. Sir, pause. Now moving to the next concept, that is methods for calculating national income. Now, total 3 methods. First is your product method, second is your income method, and third is your expenditure method. Let's understand one by one. Okay. Now, first of all, please understand this product method has different names. This product method They have given different names to product method. First is output method, second is inventory method, third is value added method, fourth is final goods method, fifth they say. So as if now you please understand total 4 methods, then I will add the fifth. So product method, also known as output method, also known as inventory method, also known as value added method, also known as final goods method. Now students, in our country, product method is widely and extensively used because we are into production of primary goods, secondary goods, and definitely tertiary products, that is services. So the value generated out of these 3 sectors, that is whatever goods produced out of these 3 sectors, the value of those goods will get recorded in national income. So in India, extensively which method is used? Product method is used. Second is income method, not used in our country. To some extent yes, but to major extent no. An expenditure method, not at all used in our country, because what is the problem with income and expenditure method? Because people, as I told you earlier also, we are more into unorganized sector, informal sector. Transactions, income, expenditure is basically done through cash. So transactions don't get recorded. So please understand. First method is very important, that is product method. Second method is your income method, and third is your expenditure method. Let's go one by one. First, let's understand what is product method. What is product method? Okay. Now, product method, under product method, national income is calculated from output side. National income is calculated from which side? Output side. Whatever goods are produced in industries and factories, but those goods should be which goods? Those goods should be final goods, final product. Now student, this pen is a final product, ready to use. You cannot put it to further processing. Such goods value will be recorded. So here national income is calculated from output side, whatever goods and services which are coming out of the factory and industry, but those goods should be which goods? Final goods, and the value of final goods will get recorded in national income. Raw material, intermediate goods, work in progress, semi-finished goods should be excluded, because otherwise it will lead to double counting. It will lead to which counting? Double counting, and our national income will be overvalued unnecessary. Not good. So please understand, value of final goods will be taken, and moment you add, you are calculating which method? You are calculating product method. Okay. Now the latest name given to this method is industry origin method. What is the new name given to this method? Industry origin method. So total how many names? Product method, inventory method, output method, value added method, final goods method, and the last is industry origin method. See, the word itself says industry origin, goods coming out of the industry, originated from industry, but it should be which product? Final product. So milk converted into cheese, we will definitely take the which value? Cheese value. A cloth converted into shirt, we will take which value? Shirt value, because shirt becomes which product? Final product. So please ignore raw material, intermediate goods, otherwise it will lead to which counting? Double counting. So please understand, while using product method, we are going to use a concept called as GVA, gross value added. Now sir, what is this GVA? Students, GVA is nothing but GDP. So sir, then why we are not using GDP? This is GVA, GDP, both are same. Since we are using product method for calculation, So we will use a language, these three alphabets we will use. Gross value added, that is GVA. So gross value added, GDP, both are same. Since I am using product method, so the language will be GVA. So gross value added in all three sectors, primary sector plus secondary sector plus tertiary sector. So goods and services coming out of primary, secondary and tertiary. All three will be added. Moment you add, you get in true sense GDP MP. You get what? GDP MP. But are we supposed to take MP for calculation? Answer is no. So what we will do? Add NFIA. Students, what is NFIA? Net factor income from abroad. Another name R minus P. So what you will get? GNP MP. Now what we will do? We will minus depreciation. So we will get NNP MP. Now what you will do? Minus IT plus S. You will get NNP FC. So NNP FC is nothing but which income? National income. So students, please understand, if they tell you to calculate national income, it means they are telling you to calculate what? What they are telling you to calculate? NNP FC. So NNP FC, national income, both are same. Perfect. So this is the way product method, value added method will be used. Now here students, please understand, value is added at each stage of production till it becomes a final product. Now say example, the price of this pen is 40 rupees, but this 40 rupees includes the hard work and efforts of manufacturer, wholesaler as well as retailer, because all three are putting efforts. They are the intermediate forces. So I am going to take 40 rupees in national income calculation because it includes the earned income for all three. So that's why we say value is added at each stage of production till it becomes a final product, and finally it will reach to customer. Is the concept getting clear? So please remember, we are supposed to take value of only final products. Raw material, intermediate goods you will exclude. Clear? Okay. So this was your which method? Product method. See, same thing I had done, less intermediate goods, less depreciation, less indirect tax, add subsidies. So in this you will get two important formulas. Formula related to GVA MP. Formula is value of output minus value of intermediate consumption. Value of output minus value of intermediate consumption. This is the first formula. Second formula for GVA MP. What's the second formula? Sales plus change in stock. Change in stock is nothing but closing minus opening stock minus intermediate consumption. So please understand, total two formulas. Again, during numerical sums it will help you. So the first formula, value of output minus value of intermediate consumption. Second, sales plus change in stock. Now students, this sales plus change in stock and value of output both are same. Sales plus change in stock and value of output is nothing but both are same. See, whatever you produce, some part you will sell, some part you will keep in the go down. This way it goes. So value of output and sales plus change in stock both are same. So sales plus change in stock minus intermediate consumption will give you what? GVA MP. Very clear. Is the product method very clear? So quickly tell me, product method has how many names? Different names, 5 names. Product method, then output method, value added method, inventory method, final goods method, and what is the latest name? Industry origin method. Clear? Okay. Shall we move to the next? So the next is your which method? Income method. Now let's understand what is the income method. Very simple, not much to explain in this. Now income method is also called as factor cost method. Also called as what? Factor cost method. Because one thing I had told you students, that there are 4 factors: land, labor, capital, entrepreneur. They are not going to work for free, that also you know. So land will take rent, labor will take wages, capital will take interest, and this will take profit. So moment you add all this, rent, wages, interest, profit, so you are calculating national income using which method? Income method. You are calculating national income by using which method? Income method. So please understand, in income method, factors of production, rewards will get added in national income. Rewards for all factors of production will be recorded in national income. Now in India we are not using this method to the major extent, maybe to some extent yes, because as I told you, transactions are more of cash. So India is more of cash based rather than cashless. So here please understand, what's the formula for income method? Compensation of employees, add operating surplus, rent plus interest plus profit, add mixed income of self-employed, add net factor income from abroad. This is nothing but your R minus P. So this formula will help you to calculate national income using which method? Income method. So what note they have given? Income method may be most suitable for which countries, which economies? Developed economies, where people properly file their income tax returns. They disclose everything. They show how much they are earning, from where they are earning. Second point, they say mixed income of self-employed. Sometimes it is difficult to segregate labor income from capital income. For example, self-employed person. In this case, a new category of income called mixed income is introduced, which includes labor and capital both. So income from different sources which cannot be distinguished, I had told it is called as which income? Mixed income. So please remember this much in mixed income, in income method. Now coming to the last method, that is which method? Expenditure method. Now this is not at all used in our country, not at all. Again, developed countries like UK, definitely they will use, UK, US. Now what is this expenditure method? See, we have done this formula, that is C plus I plus G plus X minus M. Everyone knows this formula? Okay. Now please remember one thing you have to add here. Consumption expenditure plus investment expenditure plus government expenditure plus expenditure related to exports and imports. Expenditure is nothing but money going out of your pocket. But one man's expenditure will become another man's income. So national income and national expenditure both are same. So in fact, national income, national expenditure, national output, national product, all 4 are same. So please remember, if they talk about national expenditure, they are talking about national income only. Use the word expenditure. So here, as I told you, which all things will come? Private final consumption expenditure, government final consumption expenditure, gross domestic capital formation. Please remember, this is your C, this is your G, this is your I, and this is your X minus M. Net exports is nothing but export minus import. So moment you add this, you are calculating national income by using which method? Expenditure method. Is the concept very clear? Not used in our country. Numerical sums definitely they will ask. So please remember, I am giving you one hint. Any statement ending with the word expenditure is added in national income or added in GDP. Any statement ending with the word investment is also added in GDP. Like gross residential construction investment. See, last word is investment. Gross residential construction expenditure. Private final consumption expenditure. Now this last word is expenditure. Again it will be added in national income. Also added in GDP. So please remember, any statement ending with the word investment, any statement ending with the word expenditure should be added. So at the time of sums, numerical sums, your calculation will become easy. Is the expenditure method very clear? So please remember, in private final consumption expenditure, those expenditure which we people spend, food, clothes, accessories, mobile, car, bike, this is private consumption. Government is going to spend on social infrastructure, health, education, universities, dams, airports, bridges. That comes under government expenditure. And gross domestic capital formation is nothing but investment, students. Another name for capital formation is what? What's another name for capital formation? Another name for capital formation is investment. Please remember. So even you highlight. So it is nothing but what? Investment. So again I repeat, any statement ending with the word investment to be added, any statement ending with the word expenditure also to be added. Okay. So this completes your methods for calculating national income. So total 3 methods: product method, income method, expenditure method. Okay, now coming to the last question, that is limitations and challenges for calculating national income. As I already told you that national income calculation is not accurate. There are n number of difficulties, problems associated with national income. So quickly we will see what are the limitations. Again a very important question, this could be for 3 marks, very important. Now what are the general difficulties? First we will see the general difficulties. First point says, due to income inequality, per capita income is inadequate measure of welfare. Now students, please understand, you know the formula of per capita income, national income divided by total population. Now if per capita income is greater, that doesn't mean people are happy and there is a welfare of the people, please understand. Because that is not the income of an individual, it is a general calculation. Now what happens here? There is high level of income inequality in our country. National income increases, per capita income will also increase. Good, it is good if this happens. But students, if population increases faster than national income, then per capita income will look on a lower side. So even if the per capita income is higher, but country like India always experiences the higher level of population. So per capita income may not give you the true sense of people's welfare. Second, quality improvements in system and processes. See students, here the word is quality. Important for us is there should be quantitative addition, not the quality. See, good quality, we agree, everyone wants a good quality product. But increase in quality may not increase the national income. Increase in quantity will add few points to the national income. So here another difficulty is quantity plus quality is advisable, only quality improvement is not advisable. Next is production hidden from government authorities. Like people are not disclosing their income, people are hiding their income. There is a person who is working with a company and honestly is paying tax. So government is aware that he is earning this much and is paying this much. See, his income is disclosed. But there is another person who is also working in the same company. But what he will do, he will go out of his office after office hours and he will be involved in some other petty work, small miscellaneous work, and he will be earning commission brokerage from there also. But unfortunately that person is not disclosing that income, is not showing its true income. Now say example, if I am taking lectures over here and I am paying tax, my income gets disclosed. But suppose if I take a separate lecture somewhere as a private tuition and if I don't disclose and if I take money in cash, so authorities, CSO will never come to know that this man is actually earning money from how many sources. So there are so many transactions in our country which are not disclosed by the people, so our national income looks undervalued. Next is non-market production and non-economic contribution to well-being. Now what is the meaning of non-market production? Now non-market production means there are so many activities where there is no monetary transaction involved. Transactions are mostly done out of love, care and affection. Like mother cooking food. You are not going to ask how much bill for the day. She is doing out of love, care and affection. Second, you are polishing your own shoes. See, self-service. You are teaching your real brothers and sisters. You are not going to charge fees from them. So there are so many transactions which are done out of love, care and affection, and then they are called as non-market production, non-economic contributors. Even though services is being generated, but those services don't have a value. Which value? Monetary value. So it won't get recorded in national income. Next is disutility of loss of leisure time. Now disutility of loss of leisure time means if a person decides to spend more time for recreation, for rest, he wants to relax. So can I say to that extent he is going to work less? So more leisure activities, less work will result in less production of goods and services. So that will have less contribution to my national income. So more number of leisure activities. If people of our country decide to rest more and work less, it will impact our national income calculation. Our national income will look on a lower side because people are not working hard, people are taking more of rest time. Next is the voluntary work and services rendered without remuneration in the economy. So you are helping someone in an NGO, doing a charity or doing any such activity which gives you happiness, but you are not taking anything from them, no monetary transaction again involved. So at the time of any natural calamity you gave a service as for a relief work. So you are not going to charge anything from it. Even though services was generated, it won't get recorded because it was which work? Volunteer work, done out of own wish. Next is many things that contribute to our economic welfare, such as leisure time, fairness, gender equality, security of community, feeling, etc. Now students, these all are abstract terms. You cannot measure all these terms in terms of output. These things are always experienced. So it will have no impact on national income calculation. Next is non-productive services included in GDP, for example, police services. Non-productive services, nothing but law and order, defense, police force, all these services. They come under non-productive. Neither goods nor services are added in the economy. Now moving to the end part, that is conceptual difficulties, lack of agreed definition of national income. Now national income definition is not that precise, because national income is focusing on which word? Final product, but we have seen even any goods produced which is not a final product, still it gets recorded in national income. So agreed definition is not there. Next is accurate distinction between final goods and intermediate goods. Which products are final goods, which products are intermediate goods? It's very difficult to identify. So again, calculation will take a hit. Calculation will have an impact. Issue of transfer payments. Now, see, one thing we know, that transfer payments we are supposed to exclude. We are supposed to minus transfer payments. Gift, charity, donation, scholarship, I have already taught you. But please understand, if someone is giving me gift, for me it is unearned income. I will minus it. But can I say for the person who is giving me that gift, for him it is an expenditure? Like government gives pension to its employees. For employees it is unearned income because services were rendered in the past. But for the government it is an expenditure. Now if you calculate expenditure side, that pension should get added in national income. But since our country is not using that method, we are considering that thing as an unearned income and we minus. So please remember, calculation or issue of transfer payments leads to lower national income. Next is services of durable goods. The moment you buy any product, durable product, maybe a refrigerator or maybe a LED television, any big product, washing machine, whatever extra services which are rendered for it, transportation, upliftment, whatever services, those services are not getting recorded properly because we tend to pay money to them in a form of cash. So services of durable goods, value of goods is recorded if it is produced in the same year, but the services connected to it goes unnoticed many times. Next, they say difficulty of incorporating distribution of income. Distribution of income means who is earning how much, many times it is not known. How income is actually getting distributed is not known. Since transactions are more of cash, government and CSO is not completely aware about the actual distribution of income. So if income is evenly distributed, national income will be more. But if income is unevenly distributed, national income will be less because it won't get disclosed. Valuation of new goods at constant price. Now, valuation of new goods at constant price. Now students, what happens here? We are supposed to take always real GDP into consideration. Sometimes in constant price, the base year changes. So if the base year keeps on changing, the national income calculation will have a bad effect. So the base year, when it comes to constant price, should remain same. It should not fluctuate frequently. So again, what they have written, valuation of new goods at constant price and valuation of government service. Now government also gives various services like healthcare, education, schools, colleges, hospitals, fire brigade facility. But what is the amount of service they are generating is not known. Say example, if I am working with the fire brigade department and if I go to extinguish a fire, for 2 hours I am doing that activity, say example. So what is the amount of service I have generated is not known. Because I am not going to give a bill end of the day that this is the relief work I have taken or I have done, I want this much payment, because I am representing GOI, Government of India. So here what government has decided, whatever income and salary, remuneration government employee earns, that full amount will be added in national income calculation. Like if a person is working for 30 days, he will get a salary, say example 50,000, government employee. But many times even if he remains absent, still end of the day he is getting 50,000 only. But can I say if a person remains absent for 5-6 days, he has not generated service for those 5-6 days. But still the full amount gets recorded by CSO in national income. So this is again a difficulty while calculating national income. Which amount we should actually take when it comes to government services is still not clear. Next is presence of non-monetized sector. Again, non-monetized sector means, again similar point, transactions, many transactions where goods are exchanged for goods or goods are exchanged for service. Transactions done out of love, care and affection, where there is no monetary value, any kind of help given to anyone. Again, mother cooking food will come here. Next is production for self-consumption. Anything produced, used by ourselves will be added in national income. But why exactly they are not focusing on that? They are only telling one thing, production is important, what happens to the product is not important. The K point says absence of recording of income due to illiteracy and ignorance. Now this is the root cause. Now this is a very big problem faced in our country. See, overall what we say that India is a literate country, but India is not an educated country. People don't maintain books of accounts. People don't have a bank account. Even though if they have a bank account, they will not operate. Government is trying its best to make them understand that please route every transaction through bank so that I come to know what transactions are taking place. But people are not ready to listen. They will not give you proper bill. Today you go to rural areas. You buy 5-7 items from a local kirana shop. What he will do, he will give you a rough bill. Even that rough bill will have a totaling error. So the issue is not a rough bill, the issue is even the amount is not proper. So because of illiteracy and ignorance, many times people ignore. Their behavior is like, leave it, chalta hai kind of attitude. कि हमको bill नहीं देने का, and the opposite person is also like कि I also don't want bill. Leave it, you take the full amount. See, government is losing tax because of people's behavior, because of people's ignorance. And the transaction which was supposed to get recorded, it won't get recorded now because CSO is not aware. So illiteracy and ignorance is highly responsible for lower national income. So awareness should be created. Some tough measures should be created. Next is lack of proper occupational classification. Now occupational classification means who is earning how much and from which source. Who is earning how much money and from which source. Many times is not known. A farmer is involved in production of crops, but he may be involved in poultry farming also, maybe in animal husbandry also. So he may not disclose those income and government will never come to know. See, government is not asking for tax because agriculture income is exempted from tax. But at least government should know what all activities are done in primary, secondary and tertiary sector. That example I gave of that private tuition. If I don't disclose that person is taking a private tuition, even though he has generated a services, that amount should be added in national income, but it won't get added because he is only showing that he is working in a company, but he is not telling that he is also taking a tuition. So a person may earn money from 50 different sources, but he may disclose only 5 sources. And government and CSO will record only those 5 sources. And because of this lack of occupational specialization, my national income will look on a lower side. And the last point says accurate estimation of consumption of fixed capital. Now students, consumption of fixed capital is nothing but depreciation. Now very simple point, in our country depreciation amount is actually orally calculated. Which amount is right, which amount is wrong, we don't know. Like suppose if I decide to sell my motorbike. So I will go to a vendor, second hand motorbike vendor, and if I ask the first vendor that the price of this bike is 80,000 rupees, I had purchased this bike last month for 80,000, now I want to sell, how much you will give me? So that person after 5 minutes randomly he will say, I will give 60,000. But why 60,000? Why not 65? Why not 55? From where this 60 has come? We don't know. So what I told him, give me a day's time, I will get back to you. Then I went to another vendor, second hand bike dealer. He told me, sir, I will give you 70,000. Now see, that person is telling 60, this person is telling 70. Which amount is correct? Why 70? Why not 72? Why not 45? Example. So here depreciation calculation is not accurate. Amount may differ from vendor to vendor, from company to company. So rule is very simple. Higher the depreciation, lower will be the national income. Lower the depreciation, higher will be the national income. So because of improper depreciation calculation, there could be a negative impact on our national income calculation. So main points you have to study and go. Study 6-7 points out of this. Main points. Conceptual difficulties. I hope the limitations are very clear. It's an important question. What you are supposed to do, from general difficulties take 4 points, from conceptual difficulties take 4 points, and likewise around 7 to 8 points you can write if they ask limitations. But if they precisely mention, explain only conceptual, explain only general, then take 6 to 7 points individually. Very clear? Thank you so much. Hello friends, welcome back. So today we are going to start with the second unit of chapter number 1, that is the Keynesian theory of determination of national income. So in my last video we completed unit number 1. So let's go ahead with second unit. Now in second unit, first question which comes is, what is aggregate demand function, that is ADF. Now this could be students 2 marks question. Mostly it could be asked for a 2 marks. Let's understand the meaning and the diagram. Now in simple language, what is this aggregate demand function? Now students, aggregate demand function is nothing but maximum sales proceeds. What's the meaning? Maximum sales proceeds. Now what is this maximum sales proceeds? Now students, please understand, maximum sales is always expected by an entrepreneur or a businessman. Now he always wants that more customers should come in, more walk-ins should take place, more people should buy goods and services from him, so that more sales takes place and more money he earns. Now always ask a question, when maximum sales will take place? The answer to this is, maximum sales will take place only when people decide to spend more money. So if people's disposable income is more and if they decide to spend more, can I say aggregate demand in the economy will be more? So moment the aggregate demand increases, sales for producer also increases. Now maximum sales proceeds is nothing but more number of customers coming, more number of people coming, and they are buying goods and services. See students, logic is very simple. If people decide to spend more and if people decide to save less, aggregate demand will be very healthy in the economy. अगर ज़्यादा लोग पैसा खर्च करने को रेडी है तो शॉपकीपर, प्रोड्यूसर, मैन्युफैक्चरर, बिजनेसमैन ज़्यादा कमाएगा. बट फॉर दैट people should spend, people should save less. So that is nothing but aggregate demand function, ADF. Now ADF is been categorized into 2 parts. Pay attention. Now ADF, जैसे मैंने बताया, it is nothing but maximum sales proceeds. Now, here ADF is categorized into two parts. Formula for aggregate demand is C plus I. Now, what they have done is, before I continue, पहले ये समझते हैं कि what is aggregate demand. जरा ध्यान से सुनो. Now, when number of buyers, total number of buyers buying different commodities at different price at a given point of time. The moment you go to a marketplace, you will find 100 different customers buying different goods, paying a different price at a point of time, and that is called as aggregate demand, total demand. So, aggregate demand and GDP formula remains same, C plus I plus G plus X minus M. But here students, we are going to take two sector model. Keynes has assumed how many sector? Two sector model. So, I have written aggregate demand is equals to consumption plus investment, C plus I. Now, C stands for consumption and C belongs to household. I stands for investment, I belongs to business. Now, consumption को further दो part में divide किया है students. Autonomous consumption and induced consumption. Induced consumption. This is represented by small a, this is represented by small b. Now, if you look at the formula, aggregate demand is equals to C plus I bar. Now, I bar indicates investment needs to be kept constant. They have assumed that investment remains constant, it is not changing. So, let us talk about only consumption. I am not going to touch investment here. So, consumption, as I told you, divided into two parts, autonomous consumption expenditure and induced consumption expenditure. Now, what is this autonomous consumption? Now, students, autonomous consumption is that consumption which is not dependent on income. Even if your income is zero, still you are going to spend money. So, if a person's income is zero, person is not earning anything. So, from where he is going to arrange? See, one thing please understand, person has to arrange money anyhow for his survival. Either he can beg, either he can borrow or he can steal, but he has to arrange money anyhow for his survival. So, one thing is very very clear, that income can become zero, but consumption cannot become zero. Consumption will always remain positive. So, please remember, autonomous consumption expenditure is that expenditure which is not dependent on income. In simple language, it is income inelastic. So, income increases, income decreases, or even if income remains zero, consumption will be positive. So, very simple example, you all are today full-time students, majority all are full-time students. So, you are the best examples of autonomous consumption, because as of now, your income is zero. You are borrowing money from your parents, from your guardian, from your friends, relatives. So, as if now your income is zero, but your consumption is positive. You are spending money for traveling, food, stationery, clothes, shoes, and number of things, gadgets, definitely. So, please understand, your personal income is zero, but your consumption cannot be zero, then that consumption is called as which consumption? Autonomous consumption expenditure. So, in aggregate demand, please remember, there are two things, consumption plus investment. We have broadly divided consumption into two parts, autonomous consumption expenditure and induced consumption expenditure. So, what is autonomous? Not dependent on income, it is income inelastic, and it is denoted by small a. It is denoted by small a. A represents autonomous. Now, the second is induced consumption expenditure, exactly opposite. That expenditure which is dependent on income. So if you have more money, you will spend more. You have less money, you will spend less. So that expenditure which is dependent on income will be called as induced consumption expenditure. Now this expenditure can become zero because it is dependent on income. You can say it is income elastic. It is income what? Elastic. So please understand, students, expenditure like a lavish birthday party, a lavish wedding, a very expensive renovation in your house, an expensive luxury car, imported watches, all this, the international holiday, buying expensive jewelry. Now all these things will come under which category? Induced consumption, because all these things are possible only when you have big money. So if you earn more, you can spend more. If you earn less, you will spend less. So then such type of expenditure are called as what? Induced consumption expenditure. So both the concepts clear? First was autonomous, not dependent on income. No, it was not dependent on income. Second, induced, which was dependent on income. So induced is denoted by small b, but the formula will go like this, students. It will be C is equals to A plus B y. This will be the formula. C stands for consumption, A is your autonomous, B is your induced. Now along with B, I have put Y. Now students, here Y indicates, what Y indicates? Income. Since induced consumption is dependent on income, so I have written Y along with B. So the formula goes like this: consumption is equals to autonomous plus induced consumption, which is dependent on income. That is, C is equals to A plus B Y. Is the concept very clear? Okay. Now moving to the diagram, pay attention. Now what this diagram says, ADF, as we know, maximum sales proceeds. Now your y-axis is level of employment, and this will be your consumption expenditure. So now if you look at this diagram, this is diagram related to aggregate demand function, also you can say consumption. Now in this diagram, y-axis represents level of employment. Now this level of employment is going to give us what? Income. It's going to give us what? Income. X-axis, sorry, x-axis is level of employment, I am very sorry, y-axis is consumption expenditure. Now in this diagram you will find there is an upward sloping flatter curve which is not starting from the origin. Are you able to see? Upward sloping flatter curve which is not starting from the origin. Now this curve is called as a consumption curve, or you can say it is aggregate demand function, ADF, or it is a consumption function. Now why it is not starting from the origin? Because students, consumption can never become zero, it will always remain positive. See, income can become zero, but consumption can never become zero. So OA, the level OA indicates autonomous consumption expenditure. Level OA indicates what? Autonomous consumption expenditure. So it goes like this: even if your income is zero, your consumption is positive. But is your income going to remain zero always? Answer is no. So what will happen? As look at x-axis, as your employment increases, your income will increase. So in the country, level of employment increases, income increases. So moment people get jobs, moment people get employed, they will start earning money, and moment they will start earning money, what will happen? Their consumption will increase. Their consumption will increase. So this upward sloping flatter curve indicates induced consumption. So OA, level OA is your autonomous. So this is your A, this is your B, that will give you C is equals to A plus B Y. Is the concept very clear? So please remember why this curve is not starting from the origin, because consumption can never become 0. Income can become 0. So the level OA indicates autonomous consumption, but moment employment in the economy increases, consumption also increases. That's why the curve is not starting from the origin. Is the concept very clear? So within a minute, quickly we will revise. Name of the concept, aggregate demand function, also known as maximum sales proceeds. What is maximum sales proceeds? It's a nothing but entrepreneur expects a given point of time. He always wants that more people should come, more people should buy goods and services from his shop. But that is possible only when people of our country are ready to spend. If people are ready to spend more, aggregate demand will be more, and automatically producer's income will be more. Maximum sales will take place. So here people should save less and people should spend more. Automatically demand increases. One man's expenditure will become another man's income. So maximum sales could be possible when it comes to what? Businessman or entrepreneur. That is nothing but your aggregate demand function. So the simple formula was AD is equals to C plus I bar. I bar indicates investment is kept as constant. C was divided into two parts: autonomous consumption, induced consumption. Autonomous, not dependent on income; induced, dependent on income. Very clear? Okay. So let's move to the next question now. Let's understand two sector model, circular flow of national income, two sector model. Now what we are going to do, back to back. Now let me put it in this way. Let me explain you first what is consumption function, then we will move to the two sector model. So it will become very easy for you. Okay. So let me first start with the consumption function and savings function. Later on we will continue with two sector, three sector and four sector model. Now, what is this consumption function? Pay attention. Your x-axis is level of employment and your y-axis is expenditure. Now students, in your module, they have not given a separate question called as consumption function. Or you can say there is no separate diagram for this in the institute module. But in case if they ask a question for 2 marks or maybe 3 marks, explain consumption function, Keynesian consumption function. So this diagram you are supposed to draw, and the explanation what I am giving you, please try to remember. Okay, pay attention. Now what is this consumption function? Now let us understand the meaning of the word consumption. In the previous question also I was using this word consumption. Formula you know, C is equals to A plus BY, that is autonomous plus induced, which is dependent on income. Now consumption in simple language is nothing but act of using goods and services. क्या है इसका मीनिंग? एक्ट ऑफ यूजिंग गुड्स एंड सर्विसेज. अगर मैं कोई भी प्रोडक्ट यूज कर रहा हूं या कोई भी सर्विस यूज कर रहा हूं, उसको हम कंजम्पशन कहेंगे. कि आप लोग जैसे लेक्चर्स अटेंड करने आते हो और टीचर लेक्चर दे रहा है, यू आर कंज्यूमिंग अ सर्विस, उसको भी कंजम्पशन कहेंगे. मोमेंट यू गो आउट एंड बाय एनी गुड्स फ्रॉम एनी शॉप, क्लोथ्स, शूज, और आप वो प्रोडक्ट यूज करने वाले हो, मतलब आप कंजम्पशन कर रहे हो. Please understand, the act of using goods and services is nothing but consumption. You can say it is destruction of utility. It is nothing but what? Destruction of utility. Let us move ahead. Now what is this consumption function? First of all, this concept is given by J.M. Keynes in 1936. Now J.M. Keynes is a modern economist, and this person has given this concept, and the name of this concept is psychological law of consumption. What's the name of the concept? Psychological law of consumption. Developed in which year? 1936. Now what this consumption function is trying to say? Pay attention. First of all, consumption is a function of income. Consumption is a function of income. One thing very well you people know, that consumption can never become zero. So there will be an autonomous component and there will be an induced component. Now what is consumption function? According to Keynes, as income of the person increases, what I told, as income of the person increases, his consumption also increases, but in lesser proportion than increase in income. One second, what I told? As income of the person increases, his consumption also increases, but in lesser proportion than increase in income. Because when income of the person increases initially, he will try to fulfill all his wants, all his major wants, buying a car, house, investments, property, land, farmhouse, jewelry, n number of things. So when income of the person increases, his consumption also increases, but in lesser proportion than increase in income. Because initially जब उसका income increase हुआ था, तो उसने सब कुछ खरीद लिया, everything he has spent. But now when his income increases again, he may not consume his entire income. He will save a part of it. So क्या बोलने का, income increase हुआ, consumption भी increase हुआ, but in lesser proportion than increase in income, because now that person has decided to save that money, because initially he has consumed his entire income, सब कुछ खरीद लिया, now everything he has. So now when again income increases, he will try to save more and he will try to consume less. So please remember, according to the Keynes, he gave a concept called as psychological law of consumption. So according to him, as income of the person increases, his consumption also increases, but in lesser proportion than increase in income, because later on his savings will increase at a faster rate, because later stages what will happen, savings will increase at a faster rate. Now please remember very important statement, as income of the person increases, his consumption and savings both increases. What I told, as income of the person increases, his consumption and savings both increases, but consumption increases at diminishing rate, savings will increase at increasing rate. Now these last two lines are very important ना, क्या बोला मैंने, repeat करो. As income of the person increases, his consumption and savings both increases. Fair? First point, consumption increases at increasing rate. No, consumption will increase at diminishing rate, but savings will increase at increasing rate. Please remember, students. So this was your consumption function. Come to the diagram, pay attention. Your y-axis is aggregate expenditure, your x-axis is level of employment, that is going to give us income. There is an upward sloping curve which is starting from the origin, that is nothing but your income curve, 45-degree angle. There is another curve which is not starting from the origin, which we discussed before this answer, that is your consumption curve, and everyone knows why it is not starting from the origin, because this level is nothing but what? Autonomous. Consumption can never become zero. So income meets consumption at point B. Once again, income meets consumption at point B. B is that point, students, B is that point where consumption is equal to income. B is that point where consumption is equal to income. Now let's move towards the right of point B. Right of point B, you will find one point called as B1. See students, B1 is sitting on income curve. B1 is sitting on income curve. B1 H1. B1 H1 is your income, because B1 is sitting on which curve? Income curve. M, look at M1. M1 is sitting on consumption curve. So M1 H1 is your consumption. Pay attention. B1 H1 is income. M1 H1 is consumption. Can I say income is more than consumption? Yes. So I will write Y is greater than C. So income is more, consumption is less. Once again, income is more, consumption is less. This gap will give you what? Savings. Savings will be positive. Please remember, B1 H1 is income, M1 H1 is consumption. The gap, B1 M1 gap, the gap of B1 M1, look at the diagram, B1 M1 indicates savings, and savings will increase at increasing rate. See, the gap between two curves is increasing. Now let's move towards left of point B. Left of point B, there is a point called as B2. Now this time B2 is sitting on consumption curve and M2 is sitting on income curve. So you people will tell me what will happen here. What is B2H2? B2H2 is consumption. M2H2 is income, because B2 is sitting on consumption, M2 is sitting on income. This time consumption is more than income. इस बार ज्यादा खर्चा हो गया है, इनकम कम है. So more consumption, less income. This will be giving you dis savings. This will give you what? Dis savings. So B2M2 is dis savings. Savings are negative because खर्चा ज्यादा है, income कम है. So that gap will give you triangle OAB. Look at the triangle OAB. So triangle OAB will give you what? Dis savings. Point B. Both are equal, and after B, what is the situation after point B? Savings are positive. So pay attention. Triangle OAB, this area gives you dis savings. Point B gives you, both are equal, break even. And after point B, what is the situation? Income is more, consumption is less. This area gives you what? Savings. So savings are positive. So please understand students, in this diagram we got three things. Which three things? Income is equal to consumption, income is greater than consumption, that is savings, the difference is savings, and income is less than consumption, that is dis-savings. Is the concept very clear? So in case if they ask this concept for 2 to 3 marks, like explain consumption function, it becomes very important to draw this diagram and the explanation. Very clear? Okay. Shall we move to the next concept? Now the next concept is again a connected concept. Explanation will sound very much same. The name of the concept is savings function. What's the name of the concept? Savings function. So now let's move to the next concept. Let me draw the diagram first, then I will explain you. Yes. Now, moving to the next concept, again I told you connected concept. After consumption function comes which function? Savings function. Explanation will sound very much same because actually it is a counterpart of consumption function. So please remember the first point, savings function is a counterpart of consumption function. So simple says income minus consumption is your savings. Income minus consumption is your savings. Income left after consumption will give you savings. So please remember the basic and the simple formula, Y minus C is equals to S. S stands for consumption, S stands for savings. I am very sorry, pay attention. Now what is this diagram is all about? First I told it is a counterpart of consumption function. Like consumption is a function of income, even savings is a function of income. Similar to consumption, even savings is a function of income. Now in this diagram, two things you will find. The upper part of the diagram is your consumption function diagram, which we did just now. Curve starting from the origin, income curve, not starting from the origin, consumption curve, they both meet at point B. So the upper part indicates consumption function, and this consumption function has given us this savings curve. The SS curve, the savings curve is been derived from consumption function. Pay attention. Now, what is the situation? Now, this is your consumption function, this is your income line, this is your consumption line, they both meet at point B. B is that point where consumption is equal to income. Okay. Now, let us understand. which part will give you savings, which part will give you dis savings, and where the savings are 0. Now, if I want to understand the situation at OB level, so I will move upwards, upper part, OB level. I will find that consumption is more and my income is less. If you observe carefully, I want to understand the situation at OB level. So I will check above, consumption is more and my income is less. So this part gives me what? Dis savings, and that dis savings I have plotted here. Dis savings I have plotted here because here we are showing savings, dis savings, savings curve separately, because the question itself says explain savings function. In the previous diagram I had explained everything in that diagram only, same diagram, that is consumption function. But now here we will show savings, dis savings separately. So triangle OAB, OAB indicates consumption is more, income is less. So that part gives you dis savings, but I have plotted separately, and you get one curve which starts below x axis. So savings are negative. So when consumption is greater than income, savings will be negative. That is nothing but this savings. Now if I talk about point B, I want to understand the situation in point B. Draw perpendicular line, and this point B will tell me that consumption is equal to income. So when consumption is equal to income, your savings will be 0. See, in the previous diagram I plotted 0 here only, but since we are talking separately about savings function, so please plot the lower part of the diagram. So here B indicates savings are 0. When consumption is equal to income, your savings will be 0. Now I want to understand situation after point B. After point B, let's look at here. This time income is more, consumption is less. Income is more, consumption is less. So this part will give you what? Savings. But I will plot here savings. So please remember, look at the below diagram. There is one part which is below x axis, there is one part which is on x axis, and there is another part which is above x axis. So savings can be negative. See, savings can be negative, savings can be 0, savings can be positive. So last says, when consumption is less than income, your savings will be positive. Savings will be positive. So this diagram is derived from this diagram. Without this part is not possible. So you get an upward sloping savings curve. You get what? Upward sloping savings curve, where one part is below x axis, one part is on x axis, and another part is above x axis. Dis savings, 0 savings. Is the concept very clear? So again, it could be for 2 marks, 3 marks, diagram becomes very compulsory. But if they ask only consumption function, then the previous answer. If they ask savings function, please show both consumption function as well as savings function. So the upper part will give you consumption, the lower part will give you savings. Perfect? Okay. Sir, pause करें. Okay students, now moving to the next concept, very important concept, that is circular flow of national income 2-sector model. So now back to back 3 questions, 2-sector model, 3-sector model and 4-sector model. Now let us understand what is this 2-sector model. Now students, here 2-sector in simple language means we are going to talk about 2 things, C plus I. Now in our module they have given explain circular flow of national income 2-sector without savings and investment. but I am going to teach you with savings and investment, because any which ways in 3 sector and 4 sector that thing is going to come. So let's understand 2 sector model, circular flow of national income with savings and investment. So here we are going to talk about only 2 things, C and I. Now pay attention, let's understand with the help of a diagram. This I will take households and this will be business. Now pay attention. Households represents your consumption, business represents your investments, C and I. Now this becomes bit hypothetical because our country is a 4 sector economy, C plus I plus G plus X minus N. In the previous video we have discussed this. So consumption, investment, government, exports minus imports represents 4 sector, but first we will start with the 2 sector, pay attention. Now students, this households, we all are part of household sector. We are the ones who are the consumer of goods and services, and this business are the producers of goods and services. So what we do, we go out every day, we work, we earn. Whatever money we earn, we spend in buying goods and services. Again we get employed, we earn money, money keeps on rotating in the economy. So here please understand, households provide factor services to business. It will go like this. Households provides factor services to business. Here I will write factor services. So I will go out of my house and I will work in a company. Every day people are going, people are working in a business. So we are the service providers to the business community. But the question is, are we going to work for free? अगर मैं every day किसी कंपनी में जाके जॉब कर रहा हूँ, तो मैं क्या फ्री में काम थोड़ी करेगा? Am I going to work for free? Answer is no. So अगर हम बिजनेस को सर्विस दे रहे हैं तो बिजनेस भी हमको कुछ देगा. What business will give us? Business will give us income, wages, salary, remuneration. So households are giving factor services, तो रिटर्न में बिजनेस अपने को क्या देगा? Business will give us factor payments. क्या बोलेंगे उसको? Factor payments. Because here households have devoted their time and energy to business. So in return business is giving us remuneration, income. So whose is income and whose expenditure? So household का हो गया income, business का हो गया expenditure. So one man's expenditure is another man's income. One man's expenditure is another man's income. Now say example, मेरे पास income आया end of the month. Month end में I have received the salary. What I am supposed to do? Can I spend 100% of that? See, I can, but the logic says it is important to save a part of it because future is uncertain. सब कुछ आज मत spend करो, थोड़ा बहुत save भी करो. So what households will do? Households will save some money. कहाँ सेव करेंगे वो लोग? बैंक में. कहाँ सेव करेंगे? बैंक में. And what bank will do? Bank will start giving loans. Ultimately क्या हो जाएगा? Investment हो जाएगा. So it will go like this. Pay attention. Households will save money. Some part of it will be saved. Money will be saved where? In the bank. बैंक में हम लोग पैसा सेव करेंगे. And what bank will do? Is bank going to keep money idle? No. Bank is going to mobilize that money and bank is going to give loan to business community. Business people will ultimately do what? Investment. मतलब आपका सेव किया हुआ पैसा बिजनेस तक पहुंच रहा है एंड बिजनेस क्या कर रहा है? उसको इन्वेस्ट कर रहा है. Infrastructure, bridges, airports, highways, dams, malls, metro, all this construction will be taking place. Capital formation hoga country mein. So quickly I will start again. Households provide factor services to business. We go out, we work. In return business हमको क्या दे रहा है? Factor payment business is giving, that is wages, salary, remuneration. So households income and business का क्या हुआ? Expenditure. Households will save a part of it. Where they will save? In the bank. What bank will do? Bank will give loans to businessmen and ultimately businessmen will invest that money. So your savings are getting converted into investments. Students, please understand, too much of savings is not good. But savings will be good only when it gets converted into investment. Please be very careful. If I keep money idle and if my money is not working, if my money is not creating more money, then it is very bad for the economy. So savings should reach bank and bank should ultimately give loans and that loans businessmen should actually invest. So please understand, if savings are more, what I am saying, if savings are more than investments, if savings are more than investments, it will lead to leakages in the economy. Leakages मतलब मैंने 100 रुपीज सेव किया है बैंक में, बट बैंक ने सिर्फ 50 रुपीज का ही लोन दिया है. Is my full money rotating in the economy? Answer is no. So I will say savings are more but investment is less. Less money is rotating in the economy, less money is creating employment. So please understand, if savings are greater than investment, I will use the word leakages, not good for the economy. We will speak opposite now. If investments are greater than savings, if investments are greater than savings, it will lead to injections. More money will start rotating in the economy, more employment will be created, more income people will earn. And can I say again that income people will spend? See, money is rotating hands, money is exchanging hands. Velocity in circulation of money should be more. And if this happens, if people start spending and if banks start giving more loans, our country's GDP increases, growth increases, aggregate demand increases. Good or bad? Good. So please understand, if savings are greater than investment, leakages. But if investments are greater than savings, injection. So what is better? Investments should always be greater than savings. Okay? So please understand, whatever income households will get, some part I will save. Where I will save? In the bank. What bank will do? Bank will give loan to business. What business will do? Ultimately it will lead to investment. But can I say remaining part of my income I am going to spend in buying goods and services, grocery, getting some other services, electricity bill payment, mobile recharge, then education fees, water charges, list is endless. So I am going to spend on basic goods and services. So what will happen here? So can I say households are going to spend money in buying goods and services? But who are the producers of goods and services? So business is a producer. So from business, what will happen? Goods and services will come to my house. Goods and services. But is it going to come for free? No, I am supposed to make payment. So let's make the payment. Who will pay? Households will pay to whom? Business. This is expenditure on goods and services. Now whose income and whose expenditure? Now this is business income and households expenditure. Again, one man's income is another man's expenditure. So please understand, business is the producer of goods and services. So business से ही goods and services मेरे घर पे आएगा. But free में थोड़ी आएगा. I have to make payment. So household is making payment to business. So this time business income and households expenditure. Is money rotating in the economy? Answer is yes. So this was your circular flow of national income to sector model with savings and investment. Now students, if they ask without savings and investment, please remove this part. Please remove the middle part. No problem. Perfect. Sir, 2 minutes pause करना. Okay, so students, is the concept very clear? So this was what? Two sector model, circular flow. So in next 1 minute quickly we will revise. What was the situation? Households are giving services to business. Then in return what happens? Business gives factor payment to household. Whose income and whose expenditure? Household's income, business expenditure. What we will do? Some part we will save. Where we will save? In the bank. What bank will do? Bank will give loans to business. And ultimately what will take place? Investment will take place. Remaining part. What we are going to do with remaining part? Remaining part, we are going to spend money in buying goods and services. So who will provide goods and services? Business will provide goods and services to household. Is it going to come for free? No. What we will do? Households will make payment to business. Now whose income and whose expenditure? Business income and households expenditure. So this completes your circular flow of national income two sector model with savings and investment. This is very clear. Okay. Now we will move towards a connected topic, that is equilibrium level of national income two sector. Okay, now students pay attention. Now this is circular flow of national income we completed just now. Now this is equilibrium level of national income two sector model. Now pay attention. Now if you look at the upper part of the diagram, you will find income curve starting from the origin. Then there is C, that is consumption curve. Then there is C plus I, that is consumption plus investment. Since we are talking about two sector, so we will introduce C and C plus I. But here very important is, please pay attention. Now this curve has shifted one level above. This curve has shifted one level above and it has become C plus I. It has become what? C plus I. So please remember students, the same curve has shifted one level above and it has become what? C plus I. Okay students, now look at the diagram. This is equilibrium level two sector model, that is C plus I. The previous one was circular flow, connected diagram to this, quickly we will understand. Now if you look at the upper part of the diagram, you will find an upward sloping income curve, then there is consumption curve C, then there is C plus I. Now students, please understand, this curve has shifted one level above. This curve has shifted one level above and it has become C plus I, that is this gap indicates C plus I. So this gap is I, income, investment. So C stands for consumption, C plus I stands for consumption plus investment. Now when there was only consumption, at that time our income was OY. When investment was added, income became OY1. So national income increased from OY to OY1. Now let us go to the below part, which will give us two things: injections and leakages. See students, I have already told you, savings is considered as a leakage, whereas investment is considered as a injection. So now if you look at this curve, this is a horizontal line and I have represented that horizontal line as investment. Now the question is, why this investment line is horizontal? Students, please understand, investment is not dependent on income, it is dependent on rate of interest. And in two sector we had taken C plus I bar, if you remember. Here I bar is nothing but investment needs to be kept constant, because investment is not solely dependent on income, it is dependent on rate of interest. See, without income investment is not possible, but how much you will invest, where you will invest, when you will invest, that depends upon ROI, rate of interest. आपको कितना रिटर्न्स मिलेगा, अकॉर्डिंगली आप डिसाइड करोगे आप कितना इन्वेस्ट करोगे और कभी इन्वेस्ट करोगे. So that's why investment line is kept horizontal. Horizontal indicates it is not dependent on income. So henceforth any other factor which is not dependent on income will be placed along with investment. Then there is an upward sloping line. Are you able to see upward sloping line known as savings? In the previous answer we have understood that how this savings curve has come. कहाँ से ये savings line आया है? So one part is below x-axis, one part is on x-axis, another part is above x-axis. So but now you look at this point, pay attention. You should look at this point. Look at this point. Are you able to see this point? I will name this point as B. Now, point B indicates your investment is equal to savings. Point B indicates what? Your investment is equal to savings, which means your injections are equal to leakages. Your injections are equal to leakages. I am talking about which point? Point B. Because your investment meets savings at point B, and that point injections are equal to leakages. Now, right of point B, are you able to see this area? Right of point B, see this area, this part. Your savings are more, but your investments are less. Your savings are more, but your investments are less. This part will give you what? Leakages. So you will say, after point B, savings are greater than investment. That means leakages are greater than injections. Leakages are greater than injections. Now come to this part. Are you able to see this part, this area? Here savings are less, but investment line is above. Savings are less, investment line is above. So your investment is greater than savings. Investment is greater than savings. So क्या लिखेंगे? Leakages are less than investment. This part, leakages are less than investment. So please remember 3 things we have seen. There is an area where injections are equal to leakages. There is an area where leakages are greater than injections. And there is another area where leakages are less than injections. But here very important thing is, investment will always remain horizontal line. It is not dependent on income. It should be kept constant. Savings curve is dependent on income. That's why it is sloping upwards. So one part is below X, one part is on X, and another part is above X. Is the concept very clear? So this was your 2 sector model, equilibrium level of income. Perfect? Okay. Yes, students. Now coming to the next question, that is circular flow of national income, 3 sector model now. So the previous one was 2 sector, it was consumption and investments, that was only households business. Now we are going to talk about 3 sector, C plus I plus G. So now your government is going to come. So let's understand how the diagram will look and what exactly you have to remember in this. But before I start, very important point, I will go to the previous circular flow diagram. I hope you people have understood this diagram, but in this very important point you have to remember is the outer circle. Are you able to see this outer circle? This full outer circle. This outer circle represents real flow. Outer circle represents real flow because this here what is happening, here factor services are going and here goods and services are coming. So in that case the outer circle will represent which flow? Real flow. But the inner circle, this inner circle, what is the inner circle says? Factor payment. Money is coming, salary is coming, expenditure is being done on goods and services. So this blue color, are you able to see? This represents what? Which flow? Money flow. Which flow? Money flow. So please remember, henceforth outer circle will be real flow and inner circle will be your which flow? Money flow. Now moving to the our 3 sector diagram, pay attention how things will go now. Quickly we will see what we understood in 2 sector. Households were providing what? Factor services to business. This was nothing but which service? Factor service. So in return what we got? We got income, salary. So in return we got what? Income. So this is nothing but factor income. Then what happened? From business, goods and services started coming in our house. That is goods and services. Then what happened? Payment was done, expenditure on goods and services. With savings and investment, if we know, then we will say some part will be saved. Where we will save? In the bank. Businessmen will get loan. Ultimately they will do what? Investment. So this is what we understood in two sector, and I told you the outer circle. The outer circle is your real flow and your inner circle is which flow? Money flow. Now we will introduce government here. So government will come into the picture. Let us see what government does. So we will see. First thing, let's understand the relationship between households and government. Households provide what? Tax to the government. In return what government will give? In return government will give some benefits, that is transfer payments, pension, scholarship, all those things government will give. So households are providing tax to the government, in return government is giving us what? Transfer payments. Now even households will provide factor services to the government. Like we people will go and we people will work with government departments. And in return what government will give us? Government will give us income, salary, remuneration. So here we will show that government is giving us remuneration for what? Factor services. Now students, please be very careful. If you look at this part, normally students will think why the arrow is here. Arrow should be here. No. The inner circle, the inner lines represents money flow. Even though services are going to the government, but what is coming? Money is coming. So please, your arrow should be here. So inner lines represents which flow? Money flow. So pay attention, households provide tax to the government. In return, government is giving what? Factor payments, that is transfer payments. And again, households are providing factor services to government, but in return, what government is giving? Factor payments, that is salary, wages, remuneration. So this was the relationship between government and household. Now let's understand the relationship between government and business. Now just like households are paying tax to the government, similarly business will also pay what? Business will also pay tax to the government. So this will be tax. In return what government will give? In return government will give some subsidies. Subsidies to the business. So pay attention, business gave tax, in return they got subsidies. Now government also needs goods and services. Now if government declares that he is starting a metro project, construction of metro, so he will require steel, cement, iron, wood, all those things, raw material. So business many times will purchase goods from whom? Will purchase products from whom? Business. So government is purchasing goods from business, but in return what he is giving to the business? Income. This is purchase of goods and services. But please remember, since I told you inside circle is always money flow, so arrow will come here. Even though goods are going, but money is coming. So please, this inside arrow represents which flow? Money flow. So this was relationship between whom? Government and business. Quickly we will see. Business is giving tax to the government. In return, government is giving what? Subsidies. Then government is purchasing goods and services from business. But we will show what? That money is coming in. Payment is done by the government to business. So this will represent which flow? Money flow. Now last part, relation between government and the bank. Now what will happen here? Now can I say if government's receipts are greater than government's expenditure? Now suppose government has got more money via tax and through non-tax sources, but less money is being spent. So can I say government will be in surplus? Yes. So if government's income is greater than government's expenditure, government will keep those surplus. What government will do? Government will save. So let me write here save, so it will be easy for you. What government will do? Government will save that money. So when government's revenues are greater than government's expenditure, or receipts are greater than expenditure, so government will save. But if government's expenditure is more than revenue, government's expenditure is more than receipts, then he has to borrow from the bank. So this was the relationship between government and bank. So please remember, very important, if government's revenue is greater than expenditure, they will save money in the bank. But if government's expenditure is more than revenue, they will borrow from the bank. Perfect. So first we understood household and government, then we understood business and government, then the last it was bank and government. Perfect. So this was your circular flow, national income, 3-sector model. Clear? So here government was introduced, tax, two things came into the picture. Which two things? Tax and government spending. Tax and government spending. So here please remember, when we talk about 3-sector, tax becomes a leakage and government spending becomes an injection. Because moment government will take tax from us, our purchasing power reduces. Income available with us reduces. So we will spend less. So it's a leakage. So more taxes will lead to leakage. But suppose if that money is getting invested, or if government is spending that money in the economy, developmental projects, spending money on what? Developmental projects. Then again more money will rotate, more employment will be created, aggregate demand will increase, it will have a positive impact on our GDP. Then I will use the word, it is an injection. So please remember, your tax represents leakage and government spending represents injection. So what is the idealistic situation we want? That government spending should be more than tax. So if government spending is more than tax, I will say it is an injection. But if tax is more than government spending, then it is a leakage. Is the concept very clear? Okay. Now moving to equilibrium level, circular flow, 3-sector. So this is your income curve, 45 degree. This will be your C plus I, C plus I plus G, because we are talking about 3 sector. So this gap will give you investment, this gap will give you G, government spending. Let's understand leakages and injections. Now this will be your investment. Now I have already taught you why it is horizontal, not dependent on income. Keep it constant. This is your point B. But now your new thing is coming, I plus G. This is your aggregate income. Okay, now pay attention, students. Now, this is your 45 degree income curve. Then I have introduced consumption line, that is C. Then it is C plus I, that is 2 sector. And the third, which government comes, it is C plus I plus G. So this gap is going to give you investment, this gap is going to give you government. So please remember, students, this 1, 2 and 3, these 3 lines are not 3 different lines, same curve is shifting one level above. So first it was C, then it became C plus I, then it became C plus I plus G. So when it was 2 sector, when it was C plus I, my country's income was how much? OY. So when it was 3 sector, that was when government came, it became OY1. So national income increased. But can I say, moment the third sector comes, he will also bring some leakages, he will also bring some injections. So I had told you that tax which government is taking from us and from the business is what? Leakage. But if government spends, then it is what? Injection. What should be the ideal situation? Government spending should be more than what? Taxes. Then it will be what? Injection. If taxes are more than government spending, then it will lead to leakages. Now students, please understand, tax is dependent on income. Tax is what? Dependent on income. You earn more, you will pay more tax. You earn less, you will pay less tax. You don't earn, you will not pay tax. So as your income fluctuates, your tax paying liability also fluctuates. So tax is dependent on income and tax is a leakage. So I have kept tax, where I have kept tax along with savings, because even savings is dependent on income, savings is a leakage. Even tax is dependent on income, tax is also leakage. So which two combination? S plus T, both are leakages, both are dependent on income. Now government spending, government spending, government spending is not dependent on income. Government spending is always autonomous in nature, pay attention, because government is spending money for welfare activities. So say example, because of any natural calamity, there is a mass destruction in our country, the highways, the bridges, the metro, they have collapsed, there is a huge damage to it. So government can't give reason that I don't have money. Government will not say कि continue, जैसा चल रहा है वैसे चलने दो, मैं खर्चा नहीं करेगा. Not possible. Government has to arrange money from anyhow, from anywhere. Borrow money from World Bank, borrow money from IMF, other countries, take help, but खर्चा करना पड़ेगा because government is spending for people's welfare. He is not doing extravagant or lavish expenditure. So please remember, government spending is again not dependent on income. If you don't have money, use other people's money for your benefit. In short, borrow that money. So government spending, if government spends much, it is an injection, it will create employment, it will increase our capital formation, and government spending is not dependent on income. So I have also kept horizontal. So I and G both are what? Injections, and both are not dependent on income. S and T both are leakages and both are dependent on income. This is very clear. Now students, this was 2 sector. Now this is your 3 sector. What is the situation? On point B1, what is the situation? Leakages are equal to injections. See, this is your injection and this is your leakage. This is your injection, this is your leakage. So they both meet at point B1. So B1 is that point where leakages are equal to injections. Now let's move towards right of point B. Right of point B, this part. क्या हुआ इसको? Let's move towards right of point B, this part. I am talking about this part. See, what's the situation here? This line is your leakage, this line is your injection. So here your leakages are greater than injections. So after B, what is the situation after B? So after B, situation is leakages are greater than injection. Let's move towards left of point B, before point B1, this part. We are talking about this part now, this part, where injections are more, leakages are less. Are you able to see? Injections are more and leakages are less. So before B1 you will find your leakages are less than injections. So 2 situation, pay attention. What was the situation? So this part, this is the point where both are equal. This is the area where leakages are greater than injections, and this is the area where leakages are less than injections. So in 3 sector model, please remember, tax becomes a leakage and government spending becomes what? Injection. Tax is dependent on income, so I have kept along with savings, S plus T. Government spending is not dependent on income, so I have kept along with investment, that is horizontal straight line parallel to x axis. So students, this diagram was nothing but equilibrium level, that is circular flow equilibrium level 3 sector. Very clear? Okay. So this completes your 3 sector model. Now moving towards 4 sector. Circular flow C plus I plus G plus X minus M. Let me draw the diagram first. This is your household. Here I will write bank. This is your business. So households provide factor services to business. In return, what they will get? Factor payments. Then some part we will save, some part businessmen will invest. Then here comes the government. What we understood, households are paying tax to the government. In return, what government is giving? Transfer payments. Then what happened? Government receives factor services from households. This is factor services. Then quickly we will see government and business. Government receives tax from business as well. In return, what government is giving? Government is giving subsidies. Then government also purchases goods and services from business. This arrow is very important because inside line represents money flow. And relation between government and bank. Saves money. And if expenditure is more than revenue, government will borrow money. So this was your basically 3 sector model. Now coming to the 4th sector, that is your which sector? Foreign sector. So let me complete this. So here we will introduce a foreign sector. Let's understand the relation between foreign and households now. 4 sector model. What happens here? Households provide manpower services. Which services? Households provide manpower services to foreign. Now students, manpower services means there are so many Indians who are working abroad. There are people working in Gulf countries, UK, US, Canada. So there are many Indians who are infested in foreign countries, but their families are in India. So बहुत सारे ऐसे लोग हैं जो फॉरेन में जाके जॉब करते हैं, बट उनका फैमिली इंडिया में. सो व्हाट दे विल डू, वो लोग वहाँ पे पैसा कमाएंगे और इंडिया में पैसा सेंड करेंगे. दे विल ट्रांसफर मनी फ्रॉम वन कंट्री टू अनदर. तो उसको हम लोग इंग्लिश में बोलेंगे रेमिटेंस. India is receiving what? Remittance, because people are providing manpower services to foreign countries. See, manpower services are coming, and in return what? They will give us remittance. Remittance is nothing but transfer of money from one country to another. Transfer of money from one country to another. So please remember, households are providing manpower services to foreign. In return, foreigners are giving us what? Remittance. Okay. Now let's understand relation between foreign and business. Now business is going to import certain things from foreign. Raw material, capital goods, components. So business भी foreign से कुछ ना कुछ import करेगा. तो import करेगा तो पैसा जाएगा दूसरे country में. So this is import. Money will go out. So only import we do? No, हम लोग export भी तो करते हैं. So we produce many things and we export also. Now India is a very big exporter of gems and jewelry, food grains, spices. बहुत सारी चीज़ हम export भी करते हैं. तो जब भी हम एक्सपोर्ट करेंगे तो पैसा आएगा, मनी विल कम इन. इंपोर्ट में पैसा जाएगा, एक्सपोर्ट में पैसा आएगा. सो दिस विल बी योर एक्सपोर्ट, जहां पे गुड्स आर गोइंग आउट बट मनी इज कमिंग इन. सो बिजनेस डज टू थिंग्स, इंपोर्ट एंड एक्सपोर्ट. मनी इज कमिंग इन, मनी इज गोइंग आउट. इज दिस वेरी क्लियर? So this was a relationship between what? Business and foreign, and this part was relationship between households and foreign. So this is your which model? 4 sector circular flow, national income, which includes all 4 things. India is been called as a open economy, C plus I plus G plus X minus M, that is consumption, investment, government and foreign. Is the 4 sector model very clear? So in case if they ask for this 3 marks, 4 marks, whatever, diagram becomes very, very compulsory. Don't leave. Very important. Let's understand the equilibrium. Okay students, now please understand this diagram, very simplified diagram, very easy. See, in two sector, if you remember, it was C and then it was C plus I. We have gone one level above. In three sector, it was C, C plus I plus G, two levels above. Now here I am not shifting one more, C, C plus I plus G, C plus I plus G, X minus M, no. So what I am doing, I am showing this in one curve only. So this represents full C plus I plus G plus X minus M. So this one line represents all four sectors. So your income meets consumption at point E. At that point country's national income was OY. Country's national income was how much? OY. Now moving to the below diagram, leakages and injections. Horizontal line, we have understood it has as if now two names, investments and government spending. Both are not dependent on income. Here savings and tax, both are dependent on income. So this both are injections and this both are leakages. Now since we are talking about four sector, if you remember, four sector has given you two things. Which two things? Export and import. Which two things government has, foreign sector has given? Import and export. So now students, export is not dependent on income. Because if you export, you will get money, you will receive income. In order to export, you need not require income. For imports, you need income. So exports are good for the economy. More money will come in our country. So I will say it is injection. Import is dependent on income. Without income you cannot import, because goods will come in, for that you have to make a payment. So income is needed. Too much of imports is bad because money is going out of the economy. So I will say import is a leakage. Import is what? Leakage. So which component will come where? See, export is an injection, not dependent on income. So I will keep this with along with investment and government spending. Import is dependent on income, so I will keep along with savings and taxes. So now you people will tell me what is point B telling. Point B is telling leakages are equal to injection. This area after B, what is the situation? Leakages are greater than injection. See, leakages are greater than injection. This area before point B, leakages are less than injection. So can I say this situation is ideal? Injections should always be more than leakages. Then our economy will grow, our economy will perform. Is the concept very clear? See, if you have understood the previous equilibrium level diagram, then this becomes very easy. This is a cakewalk. So henceforth there are three leakages, three injections. So you people will repeat along with me. First injection is investment, second injection is government spending, third injection is your exports. All three will increase our national income and all three are not dependent on income. So I have kept them in which line? Horizontal straight line, which indicates autonomous, not dependent on income. Then there are three leakages also. First is savings, second is tax, and third is your imports. See, savings represents two sector, tax represents three sector, and your imports represents four sector. Similarly, your investments is two sector, government spending is three sector, and your exports are four sector. So each and every sector has given us one leakage, one injection, one leakage, one injection. So please remember, leakages should always be less than injections. Is this very clear? So I plus G plus X should always be greater than S plus T plus M. Then our economy will grow, national income will increase, positive for our country. Is the whole concept very clear? So they may ask a question, explain leakages in injection, 4-sector model. Please explain all this 6, 3 leakages, 3 injections, and it is advisable that you draw this diagram. Perfect. So this completes your 4-sector model, circular flow, national income. And this was your equilibrium level 4-sector. So they will ask a separate question on this. If they ask circular flow, then it should be, students, this diagram, and if they ask equilibrium, then it should be this diagram. Very clear? Okay. Sir, pause. Now coming to a very small concept, basically they ask numerical sums on this, and after this we are left with one very big concept, that is investment multiplier, and your unit number 2 will be over, and then I will be touching upon 1 or 2 numerical sums, which will be the end of your chapter number 1. So let us understand a very small, a very easy concept, that is what is average propensity to consume, what is marginal propensity to consume, average propensity to save, marginal propensity to save. Very simple, pay attention. Now let us first understand what is this average propensity to consume, APC. Now your average propensity to consume, the simple formula for APC is consumption upon income. What was the formula? Consumption upon income. Now you know that C is a function of Y. Consumption is dependent on income. Income can become 0, but your consumption can never become 0. But when you can spend more, only when your income increases. So please remember, average propensity, propensity means the capacity to consume, the ability to consume. So average propensity to consume, APC, in simple language is nothing but consumption upon income, which means your consumption is dependent on income. Effect upon cause, what I am telling, effect upon cause. Because of income, your consumption will change. So what's the formula? I will write it properly. It is nothing but C upon Y. Consumption upon income will give you what? Average propensity to consume. Next is your marginal propensity to consume, MPC. Now what is this MPC? Formula is delta C upon delta Y. Change in consumption upon change in income. Marginal means one additional unit, something extra. मैं ज़्यादा खर्चा कब करेगा? जब मेरा income बढ़ेगा, when my income changes. So moment my income changes and my additional consumption increases, then I will say it is marginal propensity to consume, MPC. So change in income will lead to change in consumption. So delta C upon delta Y will give you MPC. Because of change in income, my consumption is changing. So मैं उसको बोलेगा it is marginal propensity to consume. Is the formula very clear? So first was APC, C upon Y, consumption upon income. Second was MPC, delta C upon delta Y, because income change होने के वजह से consumption change हो रहा है. Because of what is changing? Because of income, my consumption is changing. That is nothing but your marginal propensity to consume, MPC. Now students, in reality, MPC may either increase, decrease, or it may remain constant. But suppose if you calculate MPC at various levels and MPC remains constant. You need not worry. MPC will remain constant at all levels only when we talk about linear consumption function. See, if you remember, we had discussed this diagram, and this line is linear consumption function, this line. But suppose if it is non-linear, say example like this, then it will be fluctuating in nature. It will either increase, decrease, or it may remain constant. So you need not worry. If MPC is constant at all levels, then we are into which consumption? Linear consumption function. But if it is fluctuating in nature, then it is non-linear consumption function. So coming to the next now, consumption over, now coming to savings. Average propensity to save. Let's understand. Average propensity to save. So just like consumption, is a function of income, I told you even savings is a function of income. So here it will be S upon Y. It will be what? S upon Y. Remove C, put S. So income changes, your savings will also change. So one thing we have studied, income increases, consumption also increases, but at diminishing rate, but savings increases at increasing rate. So average propensity to save is simple formula, S upon Y, savings upon income. Now last is marginal propensity to save. Now this is your marginal propensity to save, MPS. MPS, marginal propensity to save. The formula very simple again, delta S upon delta Y. Change in income leads to change in savings. In the previous one it was change in income leads to change in consumption. Now here I am talking change in income leads to change in savings, because even savings is dependent on income. So remove delta C, put delta S. So MPS is also written like this, MPS is equals to 1 minus MPC, because 1 indicates income. 1 indicates what? Income. Income minus consumption will give you MPS, will give you what? Savings. So MPS is also written as 1 minus MPC. For basic simple numerical sums, you have to learn this formula and go. So quickly we will revise in a minute. APC, average propensity to consume. What's the formula? C upon Y. Then comes MPC. What you will do? Delta C upon delta Y. Change in consumption upon change in income. Effect upon cause. Effect upon cause. Next is your APS. Remove C, put S. Savings upon income. And last is MPS, that is delta S upon delta Y. Now MPS is also written as MPS is also written as 1 minus MPC. So this is nothing but income. Income minus consumption will give you savings. Now very important part, you can also put it in this way, 1 minus BY. Students, BY is nothing but induced. I hope you remember, C is equals to A plus BY. And why I am bringing this? Because MPC is dependent on income, even induced consumption is dependent on income. So please remember MPS, you can say delta S upon delta Y, or you can say MPS is equals to 1 minus MPC, or you can say MPS is equals to 1 minus BY or 1 minus B. Many times they will not write Y, many times they will write only B. Still it is one and the same. 1 minus B or 1 minus MPC, both are same. So please remember this formula, learn by heart this formula and go. Each and every formula you have to by heart and go. Okay? Thank you so much. Hello students. So welcome back. Now let's start with the last topic, last question for chapter number 1, that is unit number 2. So the name of the concept is investment multiplier. Now please understand students, this is a very important concept. You have to understand this very carefully. Now what is the meaning of investment multiplier? Now let's understand that how many times my country's national income is going to multiply. What I told, how many times my country's national income is going to multiply. But when it will multiply? When investment will change in the economy. So it is basically a relationship between change in investment and change in income. But which income? My income? No, it's national income. So when investment changes in the economy, national income also changes, but in greater proportion than change in investment. Let's understand, pay attention. The topic is investment multiplier. Now, this full concept, investment multiplier, is given by a person called as J.M. Keynes. But this concept, multiplier, is given by R.F. Khan in 1931, and this was in 1936. Now basically, investment multiplier talks about change in investment will lead to change in income. Which income? Country's income, national income. So now there are three formulas to this. Formulas goes like this: K is equals to delta Y upon delta I. K is 1 upon 1 minus MPC, and K is 1 upon MPS. Three formulas. This formula is very important. K is equals to delta Y upon delta I. Now here K indicates, students, K indicates multiplier. K indicates what? Multiplier. Now before I continue with the formula, let's understand the background. Now the concept investment multiplier, the full concept investment multiplier, is designed by which person? J.M. Keynes. In which year? 1936. He was of that opinion that when investment increases in the economy, our country's income also increases, but in greater proportion than change in investment. Simple. So if investment increases by 100 crore, my country's income will increase by 400 crore. So how many times it has increased? 4 times. Now this 4 times is nothing but, students, what? Multiplier. So investment increased by 100 crore. National income increased by 400 crore. 4 times investments have been multiplied. So that 4 times is nothing but K, and K stands for multiplier. So according to the Keynes, change in investment will lead to change in national income, but that national income will increase in a greater proportion than change in investment. Is the meaning clear? Now, this concept multiplier was given by, only multiplier was given by a British economist R.F. Khan. Was given by a British economist R.F. Khan. Now he was of that opinion, because of change in investment, there will be change in employment in the economy. Once again, because of change in investment, there will be change in employment in the economy. So according to R.F. Khan, it was which multiplier? Employment multiplier. See, his thought was not wrong, but he was touching bit of microeconomics. So he was of that opinion that when investment changes, employment changes. But later on, J.M. Keynes took this concept forward. He redesigned and he redefined it in terms of income. And he told, when investment changes, country's national income will change. So according to him, because of change in investment, there will be change in country's income. So his concept was known as investment multiplier, also known as income multiplier. So students, investment multiplier has two names. Investment multiplier, also known as income multiplier. So R.F. Khan's thought process was not wrong. Only thing was his approach was bit micro. J.M. Keynes' approach was full macro. Is the meaning getting clear? Okay. So now, let's come to the formula again. Formula was K is equals to delta Y upon delta I. Now this is nothing but change in income. This is nothing but change in investment. Because of change in investment, there will be change in country's national income. So I had taken the example that if investment increases by 100 crore, national income changes by 400 crore. So how many times? 4 times. 4 times is nothing but your K. So please remember, multiplier is that number which should be multiplied with change in investment, to determine country's income. Once again, investment multiplier, I am only explaining multiplier here. Multiplier is that number which should be multiplied with change in investment to determine change in country's income. And can I say income is increasing in greater proportion than change in investment? Yes. So this K indicates multiplier. So 4 times, 7 times, 3 times, 1.5 times will determine that how many times this investment is getting multiplied in the economy. Perfect. Now, what the definition says. So investment multiplier is defined as a ratio. I will again repeat. Investment multiplier is defined as a ratio of final change in income. Pay attention. Is defined as a ratio of final change in income to initial change in investment. किसके वजह से क्या चेंज होगा? इन्वेस्टमेंट के वजह से नेशनल इनकम चेंज होएगा. बिकॉज ऑफ what will change? Because of investment, income will change. So please understand, cause and effect. This is effect upon cause. Income is effect and cause is investment. So this is effect upon cause. So investment multiplier is a ratio of final change in income to initial change in investment. So अगर कंट्री में इन्वेस्टमेंट इंक्रीज हुआ तो कंट्री का नेशनल इनकम भी इंक्रीज होगा, बट इन ग्रेटर प्रोपोर्शन. So that is nothing but the concept called as which multiplier? Investment multiplier. So once again, who gave the concept of investment multiplier? J.M. Keynes. Which year? 1936. But who gave the concept of only multiplier? R.F. Khan. Which year? 1931. So according to R.F. Khan, because of change in investment, there will be change in employment. So he gave a concept called as which multiplier? Which multiplier? Employment multiplier. Was his concept wrong? No, his approach was bit micro. Who took it forward? J.M. Keynes took it forward, and he redesigned and he redefined it in terms of income. So he told, when change in investment will lead to change in income. Which income? Country's national income. Is the concept very clear? So it is also known as investment multiplier, also known as income multiplier. So very important formula is delta y upon delta I, effect upon cause. So किसके वजह से क्या चेंज होगा? इन्वेस्टमेंट इंक्रीज होने के वजह से कंट्री का नेशनल इनकम इंक्रीज होगा. So k is equals to delta y upon delta I. Is the meaning very clear? Okay. Now please understand, let's understand the working of multiplier. Now say example, suppose government invest 100 crore in factory expansion. Invested how much? 100 crore in factory expansion. Now can I say moment government will spend money, that will become the income of other people, that is construction workers, steel industry, cement industry, iron, wood, everyone will get employment. So your government is spending 100 crore, that will become the income of the employees. Income of employees. That is how much? 100 crore. Yes or no? So one man's expenditure is another man's income. Now say example, we all have received that 100 crore, total 100 crore. Now what we will do? We will start spending that money. So we are not going to spend full. I have taken MPC as 75%. Just an assumption that MPC will remain 75 at all levels. So here I have taken MPC. Now you people know what is MPC, marginal propensity to consume. So we are taking an assumption as MPC will remain constant at all levels, which means at every stage individual is going to spend 75% of its income. In reality, MPC will not remain constant, it will fluctuate. It will either increase, decrease, or it may remain constant. But here I am taking an assumption that MPC should remain constant, and I have taken as 75. So if MPC is 75, then your savings will be 25. So marginal propensity to save will become 25. Now, so government invests 100 crore in factory expansion. That becomes the income of the employees. What people will do? People will spend 75% of this 100 crore. Will spend how much? 75% of this 100 crore. So that comes to how much? 75 crore. Where they will spend goods and services. They are going to spend in goods and services. Now can I say this 75 crore will become income of producer? Because end of the day, who is manufacturing goods and services? Producer. So producer is going to earn 75 crore. Yes. So he is also going to spend 75% of 75 crore. That is 56.25 crore. And dot indicates to be continued. Now if you observe carefully, one man's expenditure becomes another man's income. Again, one man's expenditure becomes another man's income. So at every stage, a person is earning income. Why? Because someone is spending. So more you spend, more producer will earn, further he will spend. See, at every stage, income is getting generated. So investment, we started with 100, then 100 gave birth to 75. 75 gave birth to 56.25, and so on, to be continued. So please remember, investment will increase by 100 crore, but our national income will increase by 400 crore. So 4
times our national income has increased. So how many times it has multiplied? 4 times. So higher the multiplier, good is for the economy. That indicates that our economy is growing, our economy is prospering. Is the full concept very clear? Okay. So now coming to the diagram. Please understand this very simple diagram. This is your income. This is your C plus I. But what is changing in the economy? Investment is increasing in the economy. So the next curve will be C plus I1. This is your point E. This is your point E1. So when it was C plus I, income was how much? OY. But now what has happened? Investment has increased. Investment has increased. So this gap. Students, let's continue with this. Pay attention. Now, this is your 45-degree income line. Then I told consumption curve comes. Then it is C plus I. And the third is C plus I1. Why I1? Because investment is increasing. There is a change in investment. So when it was C plus I, my country's income was OY. But when it is C plus I1, my country's income is OY1. But are you able to see this gap? This gap indicates delta I. So now this part will give you, that is AE. This AE will indicate delta I, and this part is delta Y. So if you observe carefully, the gap between AE is less than gap between Y1, which indicates Y1 is greater than AE. That is nothing but change in income is greater than change in investment. So students, this gap is delta I, this gap is delta Y. So moment this gap looks bigger, which indicates that income is increasing at faster rate compared to change in investment. So this was your investment multiplier. So within a minute we will quickly revise. Name of the concept: investment multiplier. Concept designed by J.M. Keynes, which year? 1936. Only word multiplier was designed by R.F. Khan in 1931. So according to R.F. Khan, change in investment will lead to change in employment in the economy. His thought was not wrong. Who took it forward? Keynes took it forward, and he told that because of change in investment there will be change in country's income. So he gave more emphasis on macro component, that is national income. So according to Keynes, it was investment multiplier, also known as income multiplier. And the important formula was given as delta y upon delta I, that is k is equals to delta y upon delta I. So किसके वजह से क्या चेंज होगा? इन्वेस्टमेंट की वजह से कंट्री का नेशनल इनकम चेंज होगा. So how many times will be represented by k? K is nothing but multiplier. So multiplier is that number which should be multiplied with change in investment to determine country's national income. Is the concept very clear? Okay. Now, moving to the connected topic, that is leakages in multiplier. What's the concept? Leakages in multiplier. Now, what is the meaning of leakages? Let's understand. See, leakages. Now, your leakages means all these factors will reduce the multiplier effect. Now, in the previous unit, I have made you understand that anything which is not rotating in the economy, anything which is not creating assets in the economy, or anything, neither goods and services are getting produced, then that will lead to what? Leakage, like savings, tax, imports. These all are leakage, because to some extent your consumption reduces when all these things takes place. So here, what are those factors? What are those factors which will reduce the multiplier that we are going to see? First is high taxes. Can I say high tax will lead to less consumption? So more tax if you pay to the government, less will be your consumption capacity and less will be your MPC. And please remember, lower the MPC, lower will be the multiplier. Lower the MPC, lower the multiplier. Next is high liquidity preference. High liquidity preference means people are willing to hold more cash. People like to hold more cash. They don't want to park money in bank deposits. So holding too much of cash is not good. Either you should spend that money or you should invest that money. But holding idle cash will again impact the consumption. It will impact country's national income, ultimately impact the multiplier. So holding idle cash decreases multiplier. Second done. Now come to the third. Increased demand met out of existing staff or through imports. Now this is very important. Moment our country's imports increases, money is going out of the country, because goods are coming but money is going out. Money is not rotating in the economy. Money is not helping the economy. So higher imports will again reduce multiplier. Next is undistributed profits. Sorry. Next is your additional income spent on purchasing existing shares of government securities. Now, what is the meaning of existing shares? Now, shares which are already listed in secondary market, like companies like Tata Motors, Bajaj Auto, Infosys, Kotak Mahindra, Reliance Industries. Now, these companies are already listed, ITC, already listed in stock market. Now, if I decide to buy shares from the secondary market, what I will do? I will call my broker and I will tell, I want to buy 100 quantity of XYZ company. Now, that money is going to a seller of those shares. That money, whatever money I am going to pay, because I am a buyer, that money is not going to reach the company, because company has already got the money at the time of IPO, initial public offer. So please understand, students, buying existing shares and securities is not going to do any good to the multiplier. But if I put money in primary market, new fund offer, fresh shares, IPO, then there will be a positive impact on the multiplier. But investment done in secondary market or maybe already existing shares may not have any impact on multiplier. So this again becomes a leakage. Now next is undistributed profits. Undistributed profit means profit has been declared but we have not received it. So nothing is coming in my hand. If I would have got those profits, I would have spent that money in the economy. So as if now that profit is what? Undistributed, not yet distributed. Next they say increment in income used for payment of debts. Now suppose if an individual or if a country uses his income for making payment of debt, making payment for debts, can I say less money will be available for developmental activities? Productive activities will decrease, because major income country is spending for which activity? Making repayment for debts. So loans have been getting repaid. It may be country would have borrowed money from outside India. Within country it could be anything. be either internal debt or external debt. But if same money could have been utilized for some infrastructure projects, it will be an injection, our multiplier will increase. But if money is used for repayment of debts, it will be a leakage. Money is not getting utilized for productive activities. Okay. Next is full employment exist. Next is full employment exist. See students, first of all, full employment is an imaginary concept. Okay. So full employment is an imaginary concept. Everyone getting employment not possible. But if in a country level of employment is more, which indicates people have more money and people's purchasing power will be more, people will be bound to spend more. But अगर लोगों के पास काम ही नहीं है, if they are unemployed, then there won't be too much of consumption, less will be the multiplier. And last is scarcity of goods and services. So see, every country has to face some or the other scarcity. If goods and services are not available in ample quantity, demand is increasing, but seller is not having enough goods to sell. मुझे goods खरीदना है, but shopkeeper के पास goods ही नहीं है. Will I be able to purchase? No. पैसा मुझे खर्च करना है, but market में goods तो होना चाहिए. Market is not having enough quantity for selling. That's why if there is a scarcity of goods and services, less expenditure will take place. And अगर मैं खर्चा कम करूंगा, लोग अगर खर्चा कम करेंगे, तो MPC will fall, consumption will fall, and multiplier will also decrease. So these were what? These are all leakages in the working of multiplier. There is a possibility they may ask a separate question for 2 marks, 3 marks. Explain leakages in the working of multiplier. Is the concept very clear? Okay. So students, this completes your unit number 2, chapter number 1. National income is over. Thank you so much.